Get with Jason and Tech. Just have him do it. You may need to reload something. Um, some things are just easier to let Jason do. Good morning, Miss D, Miss Cindy. Morning, Steve. Izzy Got Game. Welcome to the room. Nice to have you in here. Guys, I'm Mark. Hey, Adamos. Nice to see you back in here. Um, Adriana. I love the representation of the ladies in here. It used to be just a bunch of old men, so it's kind of nice. Hey, Hamid, good to see you. Um, I'm looking to see, we've got a couple new people in here today. It's great to have you guys in here. I'm Mark. I'm going to flap my gums for about 3 hours. I want to remind you guys that this is a conversation room. This is a feedback room. This is not a lecture by any means. This is very much an opportunity for you guys to talk about anything that you want to talk about. And here's the thing, guys. Nothing's off limits. I mean, politics, being ugly, that's off limits. Good morning, Erla. But in regards to your charts, guys, there are no wrong answers. There are no wrong trades. There are no um, bad trades. But I'm going to steer you guys. Hey, good morning, Danfer. I will steer you guys towards being consistent every time. So if it feels like I'm beating a dead horse with your name on it, I might be beating a dead horse with your name on it. So guys, I'm going to give you anything and everything that you need today to be successful with the software. There's no doubt in my mind, we've got the greatest software. We've got the best education. The only thing that Nexgen cannot provide you is experience. I'm even going to give you the path to get to where you want to be. The only thing I can't give you is experience, guys. But I'm going to warn you right here on the get-go. The harder you try to make it, the more complex you try to make this, the more difficult it will be to get to where you want to be. So everything that I do in this room revolves around simplicity. And you're going to hear me say the same things every day. There's a reason. The same things work. So my daily routine, guys, every day when I'm opening charts, sipping that first cup of coffee, is I go to forexfactory.com/calendar and I check news. And I make sure that there's not something going on that could be detrimental to my trading health. I don't trade news. I don't base my trading decisions on what they say, but I'm very much in tune with whether or not there is a news release, and I'm looking for both high impact and medium impact, red boxes and orange boxes. So today, June 26th, at 10 a.m., guys, there is new home sales. So I'm writing down on a piece of paper, 10 a.m., new home sales. I'm setting a timer with Siri. Hey, don't forget to tell me at 9:58 to get the hell out of the market, because there's a news release that might make some people with a lot of money react in the opposite direction of where I may be going. Most of the prop firms out there, guys, tell you that you cannot trade into news. So this is just a great way to know when there might be some sort of violent reaction that could make it spike or jump. And I check it every morning. Everything that I talk about, guys, each and every day, there are no secrets. I love to say that. There are no secrets. I don't want to keep secrets from you. I want to give you everything that I know, but I also want to give you, keep you focused on what you need to get consistent, guys. And all the answers come from the trading guide. All the answers come from the trading guide right off the Nexgen webpage. And we're going to start with a glossary of common terms, because I want to tell you that my first hour, every hour, guys, the same spiel every day. So much so that I teach the first hour straight from a PowerPoint, because this is the most important stuff that you could ever have as a brand new user. And it's focusing on the high probability trend trade first, guys. Focusing on a trade that has been proven to win more than it loses. Focusing on a trade that creates success or confidence through the memory of success. And guys, this high probability trend trade, it's a trade when every chart agrees with the rules for the trade, guys. All the triggers are the strongest, no termination conditions exist. There's no trouble spots between you and your entry targets, guys. This is a trade that I focus on for the first hour. We're going to talk about the rules, and I do this not because I want to hold you down to one trade. I don't think anybody in here is going to only take one trade. But when you understand the very basic concepts of the high probability trend trade, when you understand the three rules, you're going to become a chart reader. You're going to be able to look at your indicators and you're going to understand what they're telling you. And once you can read your indicators, guys, you're gonna know three very key concepts. You're going to understand where the market is likely to continue. And this becomes your entry for the highest probability trend trade. This puts you in with the least amount of risk and the absolutely most profit potential. You're going to understand where the market is likely to go. This is going to allow you to have intelligent targets, to not hope that the market goes beyond areas that may stop it. And that's the third one, guys. You're going to understand where the market is likely to stop. You're going to be able to look at your charts and say, man, no more trades into this area. This is an area that's problematic. This is an area that can ruin forward momentum. This is an area where I'm more likely to give away money than make it. And it's these three very key concepts, guys. Nobody can ever take these from you once you're a chart reader. And you'll find that about 90% of your day, 90% of your day is spent reading indicators, 10% of your day is spent trading. Guys, if you're taking 30 or 40 trades a day, the chances are you're over trading. Not guaranteed, but the chances are you're over trading. If you find yourself jumping in and out of the market, you're probably not following a plan. So this first hour is designed to give you a plan, guys. This first hour is designed to give you something to grow from. And the quickest way to get to where you want to be. So I'm really talking to my brand new users here. Izzy got game. The fastest way to get to where you want to be is first posting your trades in class, guys. Posting everything that you do, everything that you see, every question that you have in class. If it's a question, just type it on a chart, throw it in there. If it's a trade, it's important that you tell me your rules for the trade. And guys, there's three rules for the high probability trend trade. Until you're comfortable reading your indicators, I'm going to respectfully request that you mention momentum, whether or not there was something in your way, and define your rules for entry every time you post in the room. Because the whole idea of becoming a chart reader is building good habits so that you can repeat them, so that you can repeat the things that are bringing you success, guys. So how to annotate for the absolute best feedback. Discuss the three rules. Discuss the language of the rules. What this does is this is going to create a correlation between the look and the rules. And your brain is going to start to click and read those indicators fast so you never miss the rules being met. I need you to show me where you got in, and I want you to define your entry rules. And this is very key, guys. If you can't define why you're getting into the market, then you're probably just jumping in emotionally. And also define where you got out, because ultimately, once you learn how to enter the market, you're going to have to create a plan for exit as well. So that's the first step in becoming confident. We're going to learn the trigger line and the rules for when it's okay to trade. You guys can simulate all day long. While I'm talking, simulate. After class, simulate. In the evening, simulate, right? Practice, practice, practice. And the goal is that you want to make sure that you're practicing the correct rules, which means that you have to understand the rules, the advantages that they give, because when you don't practice the rules, guys, when you don't have advantages, when you're not trading a pattern that has been proven to win more than it loses, what you're doing is you're relying on emotion and these gut feelings that tend to lie to us, and you're not going to be consistent. You're going to do something different based on your mood every day. So we're going to simplify a lot, guys. We're going to talk about a high probability trend trade. I'm also going to give you a plan for what we call a medium probability trend trade, which is when most of your indicators line up for the trade, but there's going to be a problem. A small issue will exist. Your ability to read charts will identify that problem. You're going to have to manage those a little more aggressively. Your ability to read charts is going to allow you to manage more aggressively. Everything that I teach is sequential. Right now we're building a very strong platform, a base, if you will, foundation with the high probability trend trade. And your ability to recognize the three very simple rules in the high probability trend trade is going to open up doors for more trades. So you've got to know what looks you're going to commit to. You've got to learn the looks so that they become easy. And that's the second piece of your path to becoming a confident trader ASAP, guys, is Nexgen gives you a spreadsheet. I'm going to give you mine as well. You're going to take a lot of pictures. You're going to post them in the room. You're going to annotate your charts. You're going to talk about the rules. And then every trade that you take, you're going to drop them into the spreadsheet that Nexgen provides, guys. And this is your trade journal. And you're not just dropping pictures, right? You're dropping every picture. And you're annotating every picture, talking about advantages. And every morning, guys, you should go back to your spreadsheet and you should ask yourself, what worked? Right? What are the things that are bringing me success? What are the patterns that are creating wins more than losses? And then you're also going to ask yourself what didn't work. Maybe you're trading in determination conditions. Maybe you're trading without momentum. Maybe you're jumping in early or exiting late. Guys, if you go through this process every day, what's going to happen is you're going to begin to recognize patterns. You're going to see patterns in the market that are bringing you success. You're going to see patterns in the market that are taking it from you. You're going to find a correlation between what feels easy and keeps you relaxed with having those advantages. And when you're breaking your rules, guys, your brain knows you're breaking your rules, even if you rationalize it. And it's going to feel forced and it's going to make you nervous. But this brief historical study, what did I do yesterday? How can I do it better today? It's going to prepare you for the day. It will accelerate the learning. And then learning the looks so that they become easy, guys. Learning the looks so it becomes easy. That's the pictures that you take. This is my spreadsheet. I'll drop this in the room for you. There's your tracking sheet. Everything you do, feedback from the room. As you learn to be a chart reader, there's a section dedicated to the rules broken down individually, pictures, and I'm going to give you a drill because you're going to have to fill this out on your own. There's also favorite looks. So as you begin to recognize patterns and you begin to recognize advantages, guys, as you start to build your trading plan, that's exactly what this section is. And then the client trades is where I've just pretty much stolen stuff from you guys. 350 pictures here plus of Nexgen users following rules, taking advantages, creating profits, entry sequences for the high probability trend trade, very basic management for the high probability trend trade. There's a whole section dedicated to patterns that repeat themselves. Guys, patterns repeat themselves every day. Some of them offer advantages. Some of them tell you that your advantages are gone. There's a section on management, a whole section on termination conditions, those areas likely to stop the market. Guys, get in the habit, 20 to 30 pictures a day. I'm telling you right now, I probably take 25 to 40 pictures a day. I know my brother takes at least 25 to 40 pictures a day. There's a reason that the best chart readers are so good at what they do. It's because when you look at a picture, when absolutely nothing is moving, when you look at a picture when there's no fear of loss, when there's no fear of getting stopped out, when there's no anxiety about winning, guys, and you just go back and you analyze the conditions, what happens is you're committing these to memory so that you can find them when the market is moving, so that you can see them when they're moving. And so what we're going to do is we're going to focus on a high probability trend trade, guys. It's only done on 2 charts. It's only done on 2 charts. There's a large chart and a small chart. And then Jonathan, we'll go back and we'll address what you're talking about right now. The challenge, and guys, here's one of the biggest challenges. If you drive your car into a brick wall and it miraculously separates upon impact and does no damage to you or the car, does that mean that driving into brick walls is the best course of action? If you jump out of a plane without a parachute and you're that 1 in a million that survives, guys, the likelihood of you dying goes up exponentially. If you're swimming with sharks, if you're doing anything dangerous, right? Russian roulette, guys. Trading isn't about the one time that you make 60 ticks. Trading isn't about the one time. Good morning, Zorro. It's not about the one time that it won or the one time that breaking your rules would have created a victory. The idea with day trading, guys, is that you can do the same thing every day, because if you do it 100 times, you're going to win more than you lose. And that's the key. Trading plans are not based off of the one time. Trading plans are based off of the 100 times. So Jonathan, as you're developing a plan, it's not the one trade that you're focused on. You have to go back and take pictures, 100 pictures of that exact same trade with the exact same conditions, and ask yourself, does it win more than it loses? And that's how plans are being made. But we tend to get so short-sighted as day traders, guys. If one thing works one time, well, hell, that's my new plan. And it just rarely works that way. So we're going to focus on a high probability trend trade this morning. And this is why I suggest keeping it simple. Jonathan, you're giving yourself 1,000 variables to try to work through, when all you really need to give yourself is 2 charts and 3 rules. Let the large chart define the direction of the market, guys. Let the large chart define the momentum in the market. Let the large chart define the areas that may or may not be problematic. And when your first 2 rules for a trend trade are met, guys, let a small chart define the entry where the market is most likely to continue. This is the easiest way to get to where you want to be. This is the easiest way to become a chart reader. We use 2 charts because they're a reflection of the crowds in the market, guys. The people that make the moves, that create the trends, that establish the momentum. The large chart is a large crowd, guys. You've got 10 million people that all want it to go up, and you've got 10 million people creating momentum, and you've got 10 million people reacting to those key Fibonacci areas. This is what leads the way, guys. Your first 2 rules will be met on the large chart before you ever think about an entry. But when it's time for an entry, there's always the small crowd, right? It's about 1 million people. 1/10 of the power, guys. And they love to fight. They love to create these small retracements. But here's the deal. They typically lose their fight 70 to 80% of the time. They know that they're short-sighted, and they know exactly where they're exiting before the large crowd starts whipping up on them. We're going to take advantage of the small crowd. We're going to let them create these little pushes. And guys, by the end of the classroom today, you're going to have a plan to enter right where their fight ends. And because they lose 70 to 80% of the time, it puts you in the position to win 70 to 80% of the time. So only 2 charts for the high probability trend trade, guys. And there's only 3 rules. And we're going to break down the rules into pictures. We're going to talk about what they look like. We're going to talk about the advantages that they create. Each rule gives you a very distinct advantage, guys. It's the first 2 that are the most important to chart reading because the entry areas are going to change as you change. So your large chart must have strong trigger lines. This is going to create the advantage of momentum. Guys, momentum pushes the market in the direction of the trend. Momentum can break key Fibonacci areas. Momentum can even cover some of the mistakes that new users typically make. Once you have momentum, and only after you have momentum, you're going to look to make sure that there's no termination conditions, no areas likely to stop the market. This is the most broken rule upon new users. Termination conditions, when there are none present, is going to give you room to your profit targets. And when you have room to your profit targets, we're going to say that you have a clear path. So once you have momentum and once you have a clear path, you're going to let the small crowd do their thing, guys. You're going to let them fight all that momentum. You're going to let them fight that clear path. And they're going to create a little pushback, a little retracement. And you're going to be able to pinpoint it with such accuracy that you'll use a limit order right at an area on your smaller, faster chart, and that becomes your entry for the highest probability trend trade. Once you can pinpoint this entry, guys, and I tell people it's going to take you a week, 2 weeks, a little bit of study, but once you can nail this entry, you have a trading plan in place, capable of winning more than it loses as you continue to grow with the software, as you become a chart reader more and more. If you bypass this, you will struggle. Trust me, I've done this long enough. If you don't learn how to identify momentum, a clear path, and an initially high probability entry area, you're going to spin your wheels for a while. I've watched it for 4 years. So large chart must have strong triggers, guys. First thing that happens is a large chart defines the trend. If the background is green on your large chart, the large chart's going up. If the large chart's going up, you should be going up with it. Background is red. The large chart is going down. The trend is down. You should be going with it. Just a little reminder, guys. Keep politics out of the room. Sorry, Ron. Keep politics out of the room. Let your political views stay outside of your trading, please. I get it. We're all ecstatic about things, and we're all passionate about things. Let's keep those out of the room. When my background is green, the trend is going up, guys. Strong triggers means that both my small triggers, these solid lines, and my large triggers, these dashed lines, have to be green as well. If they're not, I can never have strong triggers. If my larger red and my smaller green, I can't have strong triggers. If my larger green and my smaller red, I can't have strong triggers, guys. The only way I can ever have strong triggers is if my small triggers are up and above the large triggers. The large triggers should be wide, they should be angled in the direction of the trend, and the space between the two, this like scissors opening, the space between the two lets me know that the odds are favorable for the market to continue in the direction of the trend. This is what we're going to call strong triggers, guys. In a downtrend, small triggers below the large triggers are wide, they're angled in the direction of the trend. The space between the two lets me know that the odds are favorable for the market to continue down. You're going to hear odds favorable momentum all day long, guys. Odds favorable momentum can push the market. Maybe a name change. Odds favorable momentum can push the market in the direction of the trend. Odds favorable momentum can break key Fibonacci areas. Odds favorable momentum can cover mistakes, guys. Strong triggers is the first advantage. And strong triggers isn't really hard to recognize. I'm going to pull up a large chart right now. Smalls are down, large are down, trend is down. Guys, it's the space between the two that lets me know the market is likely to push down. Strong triggers can break key Fibonacci areas. Strong triggers can cover mistakes. Can everybody give me a why? There it is in an uptrend. Smalls above the large, larger wide. This is your look, guys. This is strong triggers. Strong triggers, man, there are trading plans based around strong triggers. But strong triggers don't last forever. Strong triggers will end. And when these scissors close, when the small triggers work their way back inside of the large triggers, guys, this is what we call a weakening of the large triggers. And when you have a weakening of the large triggers, anything can happen up or down. So as a brand new user, you really have two options. You either have odds favorable, right? This feels good. Odds favorable says, man, this is a market that's likely to continue. This is a market that's pushing. This is a market that has the potential to break areas. And then down here, anything can happen. And guys, that's exactly what happens more often than not. Remember, everything that we do is based on the advantages it creates. So if I go back to my large chart again, guys, let's look at the opposite of strong. Get up there. There's those anything can happen triggers. There's those weakened triggers. And look what the market is doing. Sure enough, it gets to the wrong side of them, and it's creating a retracement, guys. And you see this all day long. Weak triggers, and we get a big retracement. And if you back it up, weak triggers, there's a big retracement. And more often than not, when you start to lose momentum, the potential for that retracement is there. And if the potential for the retracement is there, then it's not the clear advantage. Guys, this is rule number one. Rule number one doesn't last forever. When it's strong, when you have momentum, that's the best time to sell Fibonacci resistance on a smaller, faster chart. That's the best time to sell Fibonacci support on a smaller, faster chart. Guys, you're going to see these tails on a large chart. These are the retracements on that smaller refinement chart. You're going to be able to pinpoint where these tails are most likely to form with that odds favorable momentum. As you become a chart reader, one line will get inside of the large, and you'll be able to say to yourself out loud, my momentum is slowing. But when you're a chart reader, guys, when you can look at it, when you can weigh out advantages, you may still find opportunities to go short. And then once the small triggers are inside of the large triggers, you have to say anything can happen. It's weakening. I don't have the advantage. Some of you will still find yourselves taking trades, managing them aggressively. If you are not a chart reader, you are not going to be able to manage aggressively. So focus on the basics first, guys. Let it be easy. And then when those small triggers are inside of the large triggers, when they reach those key Fibonacci areas, these are when the areas are more likely to stop the market. These are when those lines on your large chart are more likely to create a reversal. And guys, that's the segue to rule number 2. Rule number 2 says no termination conditions. Termination conditions false. You have to have room to your targets. We need a clear path with that momentum. Termination conditions are Fibonacci-based indicators on the large chart. They are lines on the large chart. Lines that you may know about a day in advance in some cases. These areas on the large chart may reverse the market. I always use the word may, could, might, have the potential, because nothing is guaranteed. Remember, we're trading patterns. We're trading patterns that have been proven to win more than they lose. And sometimes termination conditions break, right? But more often than not, they're going to reverse the market, at least momentarily. So the areas that we're looking for on a large chart: blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s. We're looking for cyan divergence low lines, and we're looking for magenta divergence high lines. These are the lines on the large chart that may stop the market. We're going to make a comparison between the Fibonacci area and the T3 trigger strength and location, guys. And everything begins with price reaching the area. Remember that large crowd that's defining trends, that's reacting to areas? Decisions are made at lines on the large chart, guys. Sometimes the decision is to reverse the market completely. Sometimes the decision is that the buyers and sellers are going to fight and create untradeable bounces. Sometimes the decision is that there's so much speed behind it that it's just going to smash right through. But when price reaches an area, when price reaches Fibonacci support, everybody in this room has to ask themselves, where are my triggers? And if the triggers are still above support, guys, and I'm going to tell you right now, almost every time price reaches an area, your triggers are going to be below resistance or above support. And in that moment, you have to say to yourself, this is a termination condition. This is not a clear path. This is a great spot to take profits. But if you're not in a trade, this is a big red flag saying, hey, don't trade into this area. You don't know what's going to happen. Is everybody good with that? Price reaches an area. The triggers remain above support, below resistance. Absolutely no clear path. We're going to go see some examples of it. When the small triggers and the large triggers get below the area in question, now the area is broken. Cindy, every time I see that, it looks like a carrot on a smiley face. It cracks me up every time. When the small triggers and the large triggers get below the area is broken. The path is clear. So if you're brand new with the software, guys, if this is your first 30 days with the software, anytime price reaches an area and the triggers remain above it or below resistance, it's okay to just sit on your hands and do nothing, right? Wait for the clear path. Wait for the smalls and large to break the area. Now there's absolutely nothing for the large crowd to react to. And when you couple that with momentum, guys, this sets you up for the best of the best. But there is, oh, I got you, Cindy. I was with you, but it just cracks me up because I always see a carrot, and I don't know why. First one, last one. Brand new users, these are your options. It's either broken or it's not. It's either a termination condition or it's a clear path. Once you can recognize this look, it takes you a second or two to say, hey, wait a minute. I don't have a trade, or it's time to look for a trade. It's going to open the doors. Right on, Morgan. And Morgan, you'll be glad to know that I'm in dark mode, and you're right, it is better. Once you can recognize whether it's a termination or a clear path, it's going to open the door for you to see when these areas have the potential to break, guys. And potential is a very key word here. When I have odds favorable momentum, remember, strong triggers can break areas. When the small triggers smash through the area in question, but the large triggers are lagging behind. We call this a 50-50 look, guys. 50% of your triggers have made it through, 50% have not. This is the potential to break because of the momentum, but it's not a clear path. Rule number 2 isn't met because the small and the large haven't gone through. So guys, let's go see if we can find some examples. Price reaches Fibonacci resistance. None of the triggers break. Look at the reversal that comes through it. Price reaches Fibonacci support to the freaking tick, even with odds favorable momentum. And guys, look at the bounce that happens. Is everybody seeing it? Price reaches support. That's what started the bottom. So you're going to have instances, guys, where areas break, but you have to go back and see how many times the market stops. Fibonacci resistance, mid-band, stops the market cold. Fibonacci support creates a bounce. Fibonacci resistance creates a bounce. And guys, look at this. Potential to break, but doesn't. Let's see if we can find some more of those. Potential to break, but doesn't. Potential to break, but doesn't. So guys, potential is just that. It's potential. Right now we have anything can happen triggers. Look at the retracement that comes from the weak triggers, but we didn't reach the area. We're caught in limbo. Rule number 2 is going to keep you out of consolidation, guys. So get good at this look. Termination conditions. Understand it, respect it. Scroll back 10 days on 10 different markets and see how many times Fibonacci areas stop the market. And you'll begin to understand that this is a great place to take profits and also a great place to not take that last trade. Wait for the clear path as a brand new user. And this is my reminder, guys. 90% of your day is spent reading your indicators. This is my favorite picture, I think, in Nexgen history. Because this is the picture that just sums it all up. And I'm going to bring it up and I'm going to draw on this picture, guys. I love to draw on pictures. There's a couple things that I want you to see. Odds favorable momentum can break areas. If the rules are met, get over here, you might find an opportunity to buy Fibonacci support on that potential. But this is the one that I really want you to see, guys. Dun, dun, dun. Because we had someone yesterday ask, and I love these questions, and these questions are important. Hey, Mark, there was a huge move down, and I don't see any of those tails where I can have an entry. How do I break my rules and enter the market? And guys, your brain's going to say this too. How do I break my rules and enter the market? Well, initially the answer is you don't, because you're looking for consistency before you're looking for variables. Once you're good a little bit, you'll start finding more opportunities, I promise. But guys, this whole market screaming to the downside smashes through support, and it never gives an opportunity all the way down until it reaches these yellow 1-to-1s. If you found a short trade in there somewhere, this is a great exit point because the market reached the yellow 1-to-1s, the trigger lines remained above. That's a termination condition, guys. That's an area that may stop the market. It may reverse the market. It may create an untradeable bounce. You have to say to yourself, I have no freaking idea what's going to happen. Let me not take the next short trade. And sure enough, it keeps you out of a loser. Notice the retracement all the way back to resistance. Go through the process. I reach resistance. The triggers remain below. Well, hell, that's a termination condition. I can't go long either. Wait a minute. My triggers don't match. I don't have momentum. My rules aren't met. I'm still triggers below. They still don't match. I'm still triggers below. Now it's only the potential, but it hits a mid-band and the large triggers are a full bar away. Guys, this is what we call the gap theory. When price reaches an area and the small triggers lag, or the large triggers lag behind a full bar's worth of distance, that's when your mid-band behaves as a termination condition. We'll find some examples of it. I created a little video on it yesterday too, that we can put in the market or put in the room. But eventually, guys, what happens is all of these don't do it. All of these no rules met. All of these it's not your trades. Ultimately, You have that momentum that you're looking for. The smalls are above the large. You have the clear path because all the triggers get above resistance, and resistance is now behaving as support. You have not reached the next area. You have a clear path. And guys, here's one of those tails that you will be able to pinpoint with rule number 3 to enter the market to take the highest probability trend trade possible. And what you're going to find is that this trade is easy, and this trade makes you feel relaxed, and this trade has every advantage that you're looking for, and you're going to be hard pressed to not catch this trade if you're focused on catching the best trade. The problem is that this is your 90%. This is when you don't have the advantages that you need. This is your 10%. Human nature creates opinions, guys, and it's not uncommon to see you guys losing $300 making opinions. It's not uncommon to see people losing $500 with opinions. It's not uncommon to see people losing $1,000 based on opinions. Whatever you lose when the rules aren't met is what you don't get to keep when they are. And typically the difference between successful traders and not quite there yet traders is the ability to do absolutely nothing when there's nothing to do. So Adamos, great question, good eyes. On any market other than the NASDAQ, these are small swing one-to-ones. They're taken from such insignificant fluctuations in the market that they'll have no bearing on your termination conditions. When we talk large chart termination conditions for crude oil, for the S&P, for the RTY, for gold, guys, we are focused 100% on the ones from the user guide. And those are, get over here, picture. Wow, that stretched out, didn't it? We're focused 100% on divergence high lines, red resistance, yellow one-to-ones, blue support, divergence low lines, and that mid band, if the large triggers remain a full bar away. In the grand scheme of things, these little pink one-to-ones are not enough on a smaller time frame, on a 13-2 chart. And the reason I say that they are on the NASDAQ, the reason they are a termination condition on the NASDAQ is because while your crude oil and your S&P, the large chart's a 13-2 time frame, your NASDAQ will be a 34 Adamos, which means that those swings are pretty freaking big. Does that make sense? Great eye. So guys, I'm a huge fan of this picture because it reminds you that 90% of your day should be reading indicators. 10% of your day is going to be identifying advantages and hopping on it when they're present. So I'm going to ask real quick, is everybody cool with the concept that lines on the large chart can stop the market? Lines on the large chart are where we're looking for the large crowd to make decisions. Lines on the large chart are going to let you know when it's time to not take that next trade. Lines on the large chart are what you're going to trade to. If you're in a trade, guys, the large chart gives you so much information. But sometimes the large chart, because it is a slower chart, isn't going to be able to tell you that it's about to go up even though it has a clear path. It's not going to be able to tell you that it's about to drop even though it has odds favorable momentum and a clear path. So there's one termination condition, guys, that I am going to accept from the small chart. One termination condition, and it's 3 divergences in the same price range. Divergence is a loss of momentum. Divergence, Merriam-Webster defines it as a disagreement, guys. There's a disagreement between price coming down and making a pivot and the momentum in the market. It just means that the momentum isn't following. It's a loss of momentum. You'll see it through a cyan line, a blue line, or a magenta line from a high, but you won't see it until like the 3rd bar up, guys. So 3 divergences may stop the market. This says on a smaller, faster chart that things are slowing down. It becomes more powerful when you have those anything can happen triggers. Momentum is momentum no matter what chart, guys. Anything can happen is anything can happen. It's even more powerful if that third divergence is higher than the previous from a low or lower than the previous from a high. So guys, 3 divergences at a low or 3 divergences at a high is going to allow you to see the change that you can't see on this slow moving larger chart. Everything looks like it's going down, but if you get 3 divergences, no more short trades. Everything looks like it's going up with odds favorable momentum. So if you turn your attention to your smaller, faster chart to look for an entry, but you notice 3 divergences, it's game over for that long. It may reverse the market. And guys, that's termination condition. We've let the large chart define the direction. Green is up, red is down. That's pretty simple. Everybody has that rule on day one, or that concept. We've allowed the large chart to define momentum through strong trigger lines, the first advantage that we look for. We've also let the large chart tell us whether or not we had a termination condition, an area that may stop the market, one of those likely to stop areas. And guys, if you have strong triggers and no terminations, then you are working with the advantage of momentum and a clear path. And guys, there are so many trading plans built around these 2 advantages. But your initial trading plan is pretty specific on the entry, guys. And it's going to be so specific that you're going to use a limit order to buy or sell a pullback, that little shove from the small crowd at an area. Fibs, midbands, or yellow 1-to-1s. Areas on the large chart can be problematic, guys. Areas on the small chart are where we look for bounces to go with that direction, to go with that momentum, to go with that clear path. But here's the deal, brand new users, we want those areas to be inside of triggers. And initially, even more so, we want them to be inside what we call favorable large triggers. So I want to go over the concept of why. Large triggers are a moving average. That's all they are. Small triggers are as well, but the large triggers, when looking for entries, become very important because on your large chart, price tends to return to the large triggers. Price tends to return to the large triggers. On your small chart, price tends to return to the large triggers. It's a correction. So large triggers identify the correction point. Notice that price returned to the top of the triggers and the bottom of the triggers. That's a pretty wide area. Price went right through the large triggers. That's a pretty wide area. So we're going to create what's called favorable large triggers by taking the large triggers off of the large chart and the large triggers off of the small chart. And we're going to let them overlap, one on top of the other. We're going to take those 2 correction points and turn them into 1 correction point by having them overlap. This is what we call favorable large triggers, guys. And favorable large triggers are where we expect the market to return to. Areas inside of favorable large triggers are what we expect the market to bounce off of. So you turn 2 correction points into 1 correction point, and then you shove a couple areas in there, guys, and what you have is the least amount of risk and the highest profit potential. Because we expect the price to come back to the triggers, we expect it to bounce off of the areas. That's where your entry is defined for the highest probability trend trade. When those large triggers, large and synthetic, separate, you now have 2 correction points. The small chart may correct here. The large chart may correct here. It creates indecision, guys. And you never know. Is it going to go from up top? Is it going to go from the bottom? And the more these are separated, guys, the bigger your risk is going to be, the less accuracy that you're going to have. So brand new users, I encourage you to let them be favorable as you become a chart reader, because what happens is when the large chart says up, because the background is green, when the large chart is trading all the way up here at the top of that bar on the large chart, you have odds favorable momentum. You also have a clear path. The only thing to do is wait for that small crowd to try to fight them. And guys, that happens with a reversal bar. And that's how you're going to pinpoint where to enter the market. When everything says up, when you have momentum, when the path is clear. Notice that I keep repeating the first 2 rules because they're so important to your success. You're going to wait for a reversal bar on the smaller, faster chart. You're going to wait for the small crowd to fight. The reversal bar is not your entry for the highest probability trend trade. In fact, If you're entering on the reversal bar, you're in on the wrong side of momentum. The reversal bar says, here comes the fight. Your job is to find your large triggers and your synthetic triggers and insist that they are overlapping one on top of the other, because you know this creates the highest chance of success. And as price pulls back, guys, these trigger lines are not your entry area. Trigger lines aren't what we expect the market to bounce off of. So you have to find the areas inside of the trigger lines, something to bounce off of inside of the correction point. Fibs, mid-bands, yellow 1-to-1s, guys. There's a mid-band. This is your highest point of support inside of favorable large triggers. Here's your yellow 1-to-1s. This is the lowest point of support inside of favorable large triggers. This blue shaded area represents where the market is most likely to continue, guys. Your job is to activate a limit order a tick or two above that highest point of support. And if the small crowd is able to push that far, this is going to put you in the market in the highest probability trend trade that you can take. I want you to notice, this fib is beyond the correction point. This fib is outside of the window of opportunity because it's not inside of favorable large triggers. I'm not expecting this one to be a part of the equation. These triggers define where I expect price to go. You're actually going to learn to put a stop below those triggers on the other side of those triggers. In a short trade, the reversal bar begins the pullback. At the time of the reversal bar, guys, you have to identify your favorable large triggers, the red box, and the areas within. Only one mid-band. Guys, it is freaking magical when there's only one area inside of favorable large triggers, or there's maybe 4 areas stacked on top of each other. Talk about the most precision you can get. Your limit order goes a couple ticks below that lowest point of resistance. This becomes your entry for the highest probability trend trade. Guys, if you give me 20 days studying high probability trend trade entries, you're never going to second guess the trend of the market. You're never going to wonder if you had momentum or weak triggers. You won't even question whether or not the path is clear or it's a termination condition. You're going to be a chart reader, guys. And when everything says up, when the momentum is strong, when the path is clear, you're not going to jump in at the top of this bar. You're going to patiently wait for the reversal bar to push you back to the area inside of favorable large triggers. And guys, I'm going to take a picture of this one too, because I think this is important for new users. Some of the common things that happen with new users. The first thing that they do is they say, but Mark, that fib's pretty close. I'm not sure that I have room to the target. And I'm going to remind you that we're not trading from the top of the bar. You're typically going to double or triple the room to that fib by waiting for the pullback to the areas inside of favorable large triggers. That's the first thing. The second thing is, but Mark, there's a divergence on my small chart. And I'm going to remind you that it takes 3 divergences for a high probability trend trade to keep you from looking for that trade. And you're going to say, but Mark, the small triggers turned against me, the colors don't match. That's not odds favorable momentum. At which I will lovingly reply that momentum is defined on the large chart. So guys, you've got to be able to process this stuff in your head. It's going to take a little practice. Other things that new users love to do. Mark, I waited for the pullback to the triggers, and that's an incomplete thought. And I want you to get in the habit, guys, and this is one of the most common mistakes, and I really want you guys to do this every time you take a trade. I want you to write on your small chart, enter at a pullback to an area inside of triggers. And if you start associating this language, you're never going to jump in early and create this enormous risk and this smaller amount of profit potential, because that's all you've done is you've shortened the trip to your payday. Other things that new users do, the fear of missing out. We've all fell for it. You're waiting for your entry and then the market starts to go up and you think, oh my gosh, they're going without me. and you jump in all the way up here, and once again, all you've done is you've shortened your distance to profits, and guys, you have increased your risk exponentially. This is normal. The fear of missing out is normal, and you're probably going to go through it a couple times. But if you always write on the chart, my areas or my entries come from areas inside of favorable large triggers, eventually you're going to develop a little trust. You're going to start waiting for these, and you're going to have the least amount of risk, and you're going to have the most amount of profit. And those are some common things, guys. So it takes a little practice. The rules aren't difficult. They're really not. The patterns, it's patterns. That's all it is. It's the same thing that happens every day. It's the same pattern that happens every day. It's the same thing no matter what market that happens every day. And once you can pinpoint the entry for the highest probability trend trade, ladies and gentlemen, you begin the management process, because you'll be able to put a protective stop where the market shouldn't go. And that where it shouldn't go is 4 or 5 ticks beyond those trigger lines. We expect price to correct to the triggers. We expect price to bounce off of the lines inside of the triggers, but it's not guaranteed. Guys, the small crowd wins 20 to 30% of the time, which means that we lose 20 to 30% of our high probability trend trades. For every 10 trades we take, we got to be ready to lose 2 or 3. For every 100 trades you take, you have to be willing to lose 20 to 30 of them, guys. Losses are a normal part of a positive equity curve. If you're focused on advantages, they're acceptable losses. They're costs of doing costs of doing business, because you had every advantage you need in a proven pattern. And guys, you won't mind if this stop gets hit. You're just going to dust off and say, next. I had everything in my favor. So your initial stop will go outside of the window, guys, beyond those triggers where the market shouldn't go. But with all those advantages in place, guys, it's not uncommon, almost 70 to 80% of the time, to get a reversal bar or a confirmation bar in the direction of your trade. And if you get this reversal bar, you're going to be able to place your stop 2 ticks above or 2 ticks below. And guys, happens every day. You're going to take the perfect trade right at the perfect spot with every advantage. It's going to give you a reversal bar, and it's going to tell you, hey, Izzy got game. We're doing everything that you want us to do. Tighten up that risk, because if for some reason that small crowd ate their Wheaties, you can lose 30 or 40 bucks instead of 300 to 400, guys. You can minimize your losses dramatically by having a very, very mechanical management plan. And the cool thing is, the patience that you get, 5 ticks to the fib, 27 ticks to the fib, right? 12 ticks to the fib, 27 ticks to the fib. $400 of risk, $40 of risk when it's all over. So guys, focus on this. Give me 20 days of learning the high probability trend trade. Give me 20 days of respecting weak triggers at lines, understanding that these may stop the market or create an untradeable bounce. Give me just enough time so that what happens is every time you look at your charts, guys, I'm giving you the keys to the kingdom right now. Every time you look at your charts, you have to out loud ask yourself, do I have momentum? Do I have a clear path? And if I do, and only if I do, I'm going to look for an entry. I'm going to look for a high probability trend trade entry. And guys, if you make this your go-to every time you want to enter the market, you're going to stop trading with weak triggers, and you're going to avoid termination conditions, and you're going to be focused on the absolute best entries. And this is your first 30 days with Nexgen, guys, is being able to recognize this trade, becoming a chart reader. Because you're going to understand where the market is likely to continue. That's your entry. You're going to understand where the market is likely to stop. And you're going to understand where the market is likely to go. And I want you to see this picture. My brother took this morning. I had to steal it from him because it's such a good picture. Get up there. Where did it go? Understanding where the market is likely to go. Guys, this is amazing. If you were in a short position, you knew exactly where to take profits. It's also, coincidentally, where the market is likely to stop. Once again, Not taking that short trade into these key areas is going to help preserve equity. And then finally, this was a trade today. Understanding where the market is most likely to continue and finding your entries. And guys, getting out 2 ticks above trouble that reverses the market is freaking amazing, and it feels good. And one of the great things about being a Nexgen user is you don't have to hope. And you don't have to wish, and you don't have to want. You just have to learn a couple basic concepts. So I'm going to start giving you guys the gifts, guys. The first one is Chart Reading 101. I put this together a couple months ago to help turn you guys into chart readers the absolute fastest, because you've got to know a couple key concepts. You've got to recognize the looks so that you can piece them together for a trade. So if you take 25 pictures of strong triggers, weak triggers, clear path termination, 50-50, that may be potential to break look, and then go back and find pictures of high probability trend trade entries, guys. If you go through this task, this is 245 pictures, and you don't have to do it all at once. Do it 5 a day, right? Take 20 minutes out of your life to become a chart reader. But don't just take the pictures. You have to talk about the whys. And this is where the 101 section is, guys. This is where this work gets put into place. This is strong triggers. Don't just take a picture of 2 trigger lines. You have to say, this is odds favorable momentum. Rules met, smalls above the large, wide in the direction of the trend. This is strong triggers. Look for longs on the smaller, faster chart. You have to burn these looks into your brain so that you can recognize them in a moment's notice. Whoops, there we go. So talk about why they're strong triggers. Talk about why it's creating advantages, what rule it pertains to. And guys, fill out this spreadsheet. I've given you a huge head start on this spreadsheet. A huge head start. But it's going to be up to you to get some work done so that you can become a chart reader, so that you can capitalize on these looks. The next thing I'm going to give you, I love giving you guys things. Guys, there's my spreadsheet in the room right now. There is the Chart Reading 101. And remember, you guys are all horses. I've brought you to water. I'm giving you the golden goose. Don't turn it into fried chicken. You have to be able to define your entries, guys. You have to be able to know exactly what you're looking for to get into the market, because once you know what it's going to take to get you in, guys, once you believe and create trust that this is a set of rules that wins more than it loses, that this is a set of rules that creates a statistical advantage, that the entry that comes from this trend trade checklist is an entry that typically wins 70 to 80% of the time, guys, you're gonna never want to miss this trade. You're gonna develop patience to wait for this trade. And I've never had anybody use this checklist to the letter and do worse than 70%. This is giving you the opportunity to get paid while you become a chart reader. And if you're like, but Mark, I'm still working on these looks. Well, here's the exact same checklist with what it means to have a good top or bottom, a strong top or bottom, guys. A strong top or bottom means that price came to a termination. None of the triggers broke it, and the market reversed. And what does this tell me? This tells me that decisions were made so intently at this key area that it was enough to push the market in the other direction and give me all my rules met, guys. This is a strong bottom. And what you'll notice is when it reverses not from an area, this is a weak bottom. And it may push up, but man, everybody knows where these areas are, guys, and it's not uncommon to have them change direction and go finish the move. You have to be able to identify momentum and weakness. So this is kind of a little cheat sheet for you as you take these pictures. You need to understand when the path isn't clear and when it is, and when there's only potential, because potential isn't high probability, and you've got to be able to define your entries, guys. So this one is defined to give you everything you need to recognize the high probability trend trade entry. Did I put that one in there? Nope. Let me give you that one. High probability trend trade with pictures. And guys, our first hour has led up to, whoops, wrong one. Our entire first hour was leading up to giving you a plan where you can take a trade with more advantages, where you can take a trade that is designed to optimize your chances of success, guys. And that is the KISS plan. And I give this out every day. In this KISS plan, true story, I've had brand new users, brand new, no experience with Nexgen users, get funded in these prop firms following this to the letter within their first 30 days with Nexgen. And guys, this is a stepping stone in your learning journey. This is a stepping stone. This isn't the end of the road for you guys. This is designed to optimize your chances of success with the high probability trend trade. What does that mean? That means that this is a plan designed to give you a trade that has been proven to win more than it loses, that creates a statistical advantage, that teaches you to read your indicators, and sets you up through simulation, study, class feedback, and continuous practice to create your own plan based on your ability reading the indicators. Guys, this is, if you give me 30 days, if you let this be your only focus, and it won't take you 30 days if you stay streamlined, you're going to understand terminations, you're going to understand trigger strength, you're going to understand how to enter. And guys, you will have defined the best of the best, the trade that sets you up for the highest level of success as a brand new user. So it starts by never fighting the large chart, respecting the idea that the large chart makes all the decisions, that the large chart establishes the trend, that the large chart is why you have momentum, that the large chart is reacting to those areas. And I'm going to share this with you guys. This is a little tongue-in-cheek book that my brother put together. Get over here. How to Commit Financial Suicide in One Easy Step by John Novak, guys. Trading against strong triggers. There's some pictures in the room of you guys trading against strong triggers, and it may work once or twice, right? There may be an opportunity to find success 1 out of 100, but we're looking for the one that's 80 out of 100, guys. And then trading into termination conditions. You're going to see this one as well. These are the two biggest reasons that new users lose money. These are the two biggest reasons that people struggle with finding success. So I would encourage you, don't fight the large chart. And then define your entry. And guys, your is all caps and highlighted because trend trade or day trading is an individual sport. There is no we, there is no our rules, there is no is this a good trade for us. There are your rules, guys, and you've got to own it from the beginning because when they're yours, you're more likely to want to follow them, right? Well, these are Mark's rules for entries, but I need to find more entries. These are Nexgen's rules designed to optimize my chances of success, but I don't want to wait for that. So guys, you got to create your rules or accept these as your rules. These are Andrew Z's high probability trend trade entries, right? These are Izzy Got Games, high probability trend trade entry. Once you define your entry, guys, once you can get into the market where it's most likely to continue, you're going to have to manage it. And for you guys that are brand new, and you'll probably see examples of it today in people's charts, management is the one that's going to make you pucker. Management is where your adrenaline is going to kick in. Management is where you actually have a stake in the game, or at least you feel that way. So management for the brand new user should be just as mechanical as entries. Management should be designed for the brand new user to eliminate opinion and turn it into simply an if-then scenario. And you're going to build a management plan based on your ability to read the indicators. And I'm going to tell you right now, guys, every different trade that you take is going to have a different management plan. So if you're looking for 5 different trades, you need 5 different management plans. If you are in a high probability trend trade, you have to manage it like a high probability trend trade. If you're in one of those jump-in trades I see you guys doing all the time, you've got to manage it like a jump-in trade. If you're in a medium probability, a 50-50 trade, you have to manage it like a 50-50 trade. So guys, the more things you give yourself to think about as a brand new user, the more difficult it is to follow your rules, because you're not just looking at 3 rules on 2 charts. Suddenly you're looking at 32 rules on 5 charts. So let your entry be at the area where the market is most likely to continue. This is the beginning of management. Great entries create manageable trades. Great entries reduce risk. Great entries create a stop that makes sense where the market shouldn't go. And you're either going to get stopped out or that market's going to go in the direction of your trade. You're going to get that confirmation bar, that reversal bar in the direction of your trade. And if you do, this is where the if then happens, guys. If I enter where the market is most likely to continue, then my stop goes where the market shouldn't. If the market gives me a reversal bar, then my stop goes 2 ticks above it. And there's absolutely nothing for you to do until you either get stopped out or the market hits your first profit target, guys. And in the KISS plan, in this very mechanical plan, your first profit target is only $100 in the distance. $100 from your entry. Guys, it's not uncommon to hit your first target on the reversal bar that lets you move your stop. You have $100 in your account now. Even it's simulated, it's monopoly money, but it still feels good. Your palms start to dry up, the butterflies in your stomach fly south. You're feeling confident because you just nailed the high probability trend trade. And not only did you nail the high probability trend trade, you just made money. And money feels good, guys, and that's the point of all of this. So once you hit your first target, you're going to move your stop to break even. I want you to see something. Arbitrary stop movement would have gotten you stopped out of this trade. Now you're break even. Now you have zero risk. Now you have $100 in the bank. And guys, the whole idea for that is so that you have the courage to hold for the second target. And guys, your second target is only $200 away from your entry, which means that on two contracts, the best of the best entry, the most mechanical approach to trading that I could ever think of, you just made $300. And you exited the trade. And you didn't have to say, I hope it doesn't reverse. I hope it goes further. I hope I don't get stopped out. You're out, guys, and that's a $300 trade. And let's pull up the handy dandy calculator real quick. And I want you guys to see something, because there's a lot of people that come to me and they firmly believe that the only way they're ever going to make money in the market is if they're taking all the trades, if they're making all the money, if they're holding for the biggest moves, guys. If the best you could do is $300 a day, even if it's three break-even trades, right? First target break-even. There's typically 252 trading days in a year. What happens when your 2 lot becomes a 4 lot and you have the exact same management plan, right? What if you use one of those trade copiers and you're taking that exact same, very basic, across 20 accounts? It's not all the money that you need, guys. It's the best money that you need. And you've got to be willing to get paid. People that hold on forever, people that let trades come back and stop them out, aren't the people that are finding success in the market. Embracing your advantages, keeping your advantages, guys. And I'm going to tell you right now, if you want to see the most mechanical approach to management, if you want to watch it in play, let me close these out and pull up my internet real quick. Yesterday at the end of class, we took a 50-50 trade, one of those medium probability trades. And we talked through every reason for entry. We talked through every challenge. We talked through where our stops went, why they went there, why we were looking for profits where we were. And I'm going to give you guys the link that starts from entry. And it's there. And we had just come back from break. I want you guys to go through this. If you weren't with me yesterday, I want you to go through this, because this is what we do every day. This is what I teach every day. And that's kind of it in action, guys. From entry to stop placement to profits reached. And what's funny is the classroom kept telling me to just grab the money, take the money. And the classroom told me, oh no, but what if it comes back and gets you? But Mark, what about this and what about that? And the only thing that I could say to the classroom is my rules say that I have to take it here. My rules say that I have to put my stop here. And guys, once you embrace the idea that the only reason you're in a trade is because of your rules, that the only way you'll manage your trade is because of rules, it takes so much emotion out. And someone mentioned, Mark, you make it look so easy. I make it look easy because I have 10,000 pictures. And while you guys give them to me for feedback, I go to the source, guys. I go to John Novak, and we trade pictures for 2 hours every morning. We trade chart read thoughts for 2 hours every morning. We recognize patterns for 2 hours every morning. I have a coach. I have a mentor. The same way I get to be your coach and your mentor, guys. Take advantage of it by posting in the room. Take advantage by putting the feedback into your spreadsheet. Take advantage by following a very simple plan that's been proven to win more than it loses so that you can find advantages. Guys, this is a termination condition. This is a termination condition. So let's go through it. Most current bar. The market's going up. Give me a Y if you see the green background. The market is going up. Yes, you guys got this, right? Work with me here, new users. I promise you this is going to pay dividends. Price reached an area, the triggers remained below. Price reached an area, the triggers remain below. Guys, this is a termination condition. Can everybody in the room give me a Y and say, I don't have a clear path? This is an area that may stop the market. This is an area that may create an untradeable bounce. This is an area that can ruin my good time. And right now, there's some of you that are saying, but I have an area inside of favorable large triggers. But Mark, there's an area inside of favorable large triggers. But rule number 2 isn't met, guys. You can never expect this trade to win more than it loses. You can't. And you might be willing to take a shot. We'll come back to it and we'll see what happens. But guys, this is what I do. You have to, every time you look at your market, every time you're contemplating taking a trade, do I have odds favorable momentum? What do you guys think? This is the S&P. Do I have odds favorable momentum? Absolutely. Do I have a clear path? I do not. My small triggers have broken through, but my large triggers have not. Do I have lines inside of triggers? Absolutely I do. If I were going to take a medium probability trade, I have to understand that my window of opportunity where the market is most likely to continue is this big, almost $200 worth of risk. Am I willing to take a trade with $200 worth of risk, hoping that areas break? Guys, that's an answer that only you can answer, right? That's a question only you can answer. But if I go through the process, I do have momentum, I don't have a clear path, there are areas inside of the triggers. Does this fit my trading plan? And you have to ask yourself, does it fit? And if you don't know, you don't know. Pete, you said that new home sales lower, slightly less than forecast. And see, guys, there's people that pay attention to that. I couldn't care less. The S&P didn't budge. The S&P didn't give a shit, right? But somewhere, somebody was gauging a reaction, right? And because we knew that there was news, we chose not to jump into it. Pretty cool, right? And that's why I don't trade news, Pete. I couldn't care less what they say. I just don't want to be the guy that has his rules met for a short when the guy with way more money decides he wants it to go up. So, all right, we're going to see what this potential to break does, guys. I'm going to go take 5 minutes and stretch my legs. When I come back, we're going to talk about your charts. We're going to talk about, I just killed my chart. We're going to talk about every picture that's been put in the room, guys. Every picture that you guys put in the room, we're going to break it down into 3 things. We're going to break it down into momentum. We're going to break it down into the clear path. And we're going to talk about the entry. And here's what I'm going to say. If you can't define the momentum, well, then you need to go back to school to define the momentum. If you don't know if you had a clear path, you need to go back and study to make sure that you understand termination conditions. And guys, if you can't define why you entered the market, how are you ever going to manage it? How are you ever going to understand what it takes to get you out? Because if I'm in a momentum trade, it's going to take a loss of momentum to get me out of that trade. If I'm in a high probability trend trade, it's damn near going to take an act of God to take me out of that trade. And if I'm in a medium probability trend trade, there may be things like divergence that ruin my good time. There may be things like weak triggers. There may be things like hitting my first trouble spot. So if I don't know why I've entered the market, guys, I'm never going to understand how to manage it. And this is such an important part of getting to where you want to be. And that's one of the reasons why keeping it focused in the beginning is such an advantage for new users, because the less you give yourself to think about, the more likely you are to manage correctly, to enter correctly, to make sure that you are giving yourself a statistical advantage every time you enter the market. Do I sound like a broken record yet? Do I sound like I'm beating the hell out of that dead horse? I hope so. I hope so, because there's an easy way and there's a hard way, guys. There really is. There's an easy way and there's a hard way. I'm going to give you guys one more thing before I call it a day here. Sorry, I'm also reloading my Ninja. And this is the things you have to know before you enter the market. Things that you absolutely positively have to know in order to be successful, guys. And let me find it. Sorry, I have to connect. Where did it go? Things that you have to know. I know that I have it. There we go. I'm going to bring this up real quick while the S&P loads, guys. The things you have to know getting into the market, guys, before you ever sit down with live money, right? Not on simulator, because you're learning these things on simulator. What are your rules for entry? And what do they look like? Can I recognize my rules for entry instantly so I never miss an entry? And guys, it's okay. And let me say this real quick. It's okay to not be good at this on day one. It's okay to not be good on this on day 30. You're brand new. None of us went to college and in our freshman year thought that we were ready to do an appendectomy because we knew one day we were going to be a doctor. None of us in our first calculus class were building skyscrapers because we knew that we wanted to be an architect or we knew that we were going to be an engineer. So guys, give yourself a little grace. All of you alphas put a lot of pressure on yourself. But you also have to know what are your management rules after you entry. And initially, they should be the KISS plan. They should be very mechanical. And it depends on the trade, guys. So the rules for a high probability trend trade are different than the rules for a medium probability trend trade. The rules for a momentum trade are different than the rules for a high probability trend trade. So stay focused, right? And if it's not clearly drawn out, if your plan isn't solid, you're going to let adrenaline, opinion, fear, greed, and that's going to fuel the moves that you make. And we've all done it. I've done it. And sometimes when the market is slow, guys, you're going to sit and sit and sit in that 90%. And that's why I'm about to take this break, because sometimes you got to reset. You got to get away. Don't let your brain create trades because you're bored. So things to think about. Know why you're getting in. Know why you're getting out. And try to commit to that mechanical approach in the beginning. And what you'll find is that within 30 days, guys, within 30 days, you're going to understand what you're looking for. Within 30 days, you're going to understand advantages. Within 30 days, you're going to be able to nail this high probability trend trade if you don't cloud it up. If you don't cloud it up with a million options. You got it, Steve. And then Steve, this was actually the response to an email. So if it looks like I was talking to somebody. I actually was on this one. But guys, I'll share everything. That's it right there. I'm trying to get this S&P to close. And then Red Rob says that the S&P went down and the S&P went up. And here's the cool thing, guys, is the S&P is going to go up and down for the rest of its life. And the Nasdaq's going to go up and down, and crude oil is going to go up and down. And you guys are going to have a plan to be able to take it either direction, to be able to capitalize either direction. I'm going to kill my Ninja Trader real quick. I thought I had my computer all worked out, but I tend to, seems like I don't. And then what I'm going to do is I'm going to make it open up without any workspaces, and then we're going to move forward. So if you have a question about the high probability trend trade, I want you to drop it in the room. I want to make sure that you get your answers. If you're brand new, I want to remind you that day one is very much like drinking from a fire hose. There's a lot of information coming at you. But if you keep it simple, if you let your approach be basic, I promise you by the end of the first week, you understand every word coming out of my mouth. You understand advantages. Let me skip that right now. You understand the simple concepts that'll carry you to long-term success. So while everything happens, I'm going to put that up, guys. There's your on break look. I'll have a chart loading behind it, and I'll see you guys in 5 minutes. There's crude oil traded directly into a termination condition, right? Is the fact that it broke, does that mean that all termination conditions are going to break? Guys, and this is what people do a lot. But Mark, if I would have, I hear this all the time. If I would have just broken my rules, I could have made $200. Does everyone see that? If you just would have broken your rules and taken a long trade with weak triggers from synthetic triggers and not an area into a termination condition, I could have made $300, Mark. And I hear this a lot. And this is where I encourage you guys. And you could have lost 300, and you could have lost 300, and you could have lost 300, and you could have lost 300. So it's not the one time. It's whether or not it works more often than it doesn't. So I'm going to scroll to the top of the room, guys. We're going to talk about advantages. A lot of you guys posted yesterday. I'm going to go through and we're going to look at them. And if you don't talk about momentum, a clear path, or your entry rules, you are going to hear it from me. Just go ahead and brace yourself. Go ahead and brace yourself. And then Paul, guys, I'm going to go through like 7 or 8 of them, so I don't have to scroll from the bottom to the top over and over. And this way it opens me up to talk about what you guys are doing and then still be available for feedback. So I'm going to scroll to the very bottom. And all of these are pre-classroom, guys. I want you to know this. All of these are pre-classroom. Every one of these is from before. And I'm totally cool with that. Let's get you the answers you need. So Paul, and his entry is all the way back here. You confused the hell out of me yesterday, Paul. He's got odds favorable, the potential to break, and the area is not broken yet. And then there's one divergence on the pullback. And then as it comes up, he does get a clear path, but now he's got weak triggers. And see how it changes. And then when he's got weak triggers, and he's got weak triggers, and he's got a second divergence, Paul takes the entry right at the top. So this isn't a high probability trend trade. This is a medium probability without that odds favorable momentum, and it just doesn't work. And it just doesn't work. And that happens sometimes. Wasn't high probability. There's that 50-50 trade. Potential to break. No divergence. Perfect entry. Stop where the market shouldn't go. Easy money all the way down. Guys, this is the same trade that we took in class yesterday live. I gave you the link for it if you want to go through and see it. Actually moving. And Paul, you knew what you were getting into. And there you go. Guys, if you're willing to break your rules, that's on you, right? This is an educational room. I have to say something clever, like it's not high probability, like you're forfeiting advantages. And this isn't an unlikely scenario. But if you're not in a trade, how can you ever make money, right? If I'm not in a trade, how can I get paid? Joel, odds favorable, 50-50. One divergence, perfect entry, second divergence on a 50-50, sure enough, kills the trade. And guys, I'm going to tell you right now, if you follow the KISS plan, this is a no-go. This is a rules not met, another avoidable loss. But here, when it's odds favorable and a clear path, pull back to support, it's easy money. And when it's odds favorable and a clear path, pull back to support inside of triggers, it's easy money, right? Are we seeing a correlation? Odds favorable, clear path. If you get in here, it's easy money. If you take it with two divergences, a tick from resistance, it's not. And then, Paul, you push the edge all you want, right? Push the edge all you want. Guys, take all the chances that you want to take. Take all the risky trades. Take all the indetermination conditions. Take all the rules not met trades that you want to take. It doesn't affect my life. It will affect yours if you're trying to find success, guys. There's a reason that this 50-50 with divergence fails, right? I give you a plan that says don't take that trade if you're following the KISS rules. There's a reason that it's a winner, that it's a winner, that it's a winner if taken at the right spot. There's a plan for success, and there's a plan that doesn't offer success. Smalls are up, large are down, almost to a termination, no pullback, jump in. And Joel does a great job with this one. Just know the rules. Rob, know your rules. Know what you're looking for to get into the market, right? Don't worry about what Parker's doing, and don't worry about what Adamos is doing, and definitely don't worry about what John Novak is doing. Design your plan, right? Write it down on a piece of paper and focus on the execution. Don't worry about the results, guys. It's simulator money. Yeah, no, I'm with you. That was for the class, Rob, because I love everything that you said. Guys, this is a jump in into termination, no high probability trend trade. Hell, this is a jump in. This is the trade that we call the JTFI trade. Just jump in. But what Joel did is he jumped in with the immediate momentum, and he held it until that momentum was gone. And guys, having a reason to exit when the only thing getting you in a trade is momentum is freaking brilliant. And Joel, I like it. Not a high probability trend trade. All right, guys. You're going to love to do this stuff. Odds favorable, momentum down. Friendly. Jump the friendly in. Odds favorable to the downside. Odds favorable to the downside. Every chart is red. Every trigger's down. And going long. Going long. And it worked. So guys, I'm obligated to say, you got lucky. You got lucky. Fight every trigger on every chart. Go take 50 pictures. Tell me how many of them win. This one didn't make any sense. They didn't line up. Not odds favorable momentum. Directly into a termination condition. And once again, getting lucky. Getting lucky, guys. Luck is a horrible trading plan. Everything says down, tries to go up, loses. This happens more often than not. I'm okay with it. You guys do whatever you want to do. I got absolutely no qualms with it. I would rather have an advantage over luck all day long, guys. I would rather know what the hell I'm getting into instead of hoping that having to be in the market works. Jonathan, Nexgen teaches a trade that says with this much momentum, with the small triggers breaking the area, this is your entry right here. This is the momentum trade that Nexgen teaches, and it is a full point better than your entry. Why do I point this out? Because this entry right here, ladies and gentlemen, let me show you something. Where's my internet? Come on, internet. Right here, I have rules. I have rules to take this trade, which means that I know exactly where I need to enter, and I know exactly what it takes to get me out. And I want you guys to see a couple different things. Jump in on the wrong side of the momentum indicator. Jump out jump in, jump out, jump in, jump out, jump in, jump out. It's odds favorable. If you have rules with this look, you're in at the fib, you have 2 ticks of risk, and you're not hoping. And guys, this is kind of where I went into. If you know what your advantages are and you can define an entry, you know how to manage it. To get in, and then out, and then in, and then out, and then in. And why would your target go to the other side of Fibonacci support when we know that this is an area that may stop the market? You have to have a plan, but what you're going to say is that I got out with 250, so this must be a kick-ass trade, right? I made $250 this time. This is my new trading plan. It requires me to jump in and out 4 times and not really understand why. And Jonathan, I'm not trying to beat you up, but guys, there's an easy way to do things and there's a hard way to do things. And Jonathan, do you suppose on one chart you could write the rules for all of these trades? I love your large chart. Large chart's an easy read. Large chart is an easy read. And guys, this is what I put together for Jonathan. Because I'll tell you what, I'm going to tell you right now, Jonathan, you participate. I will give you everything I own to help you find success because you ask for help. This is what I would do. I have odds favorable momentum and a 50-50 look on the large, right? That's my large chart read. Don't have a boat in my arsenal. I don't live near a lake. So, Jonathan, does that make sense? This is all you need to write about that large chart. But the deal is you have to understand what this means. And this is where I think people mistake it. Odds favorable momentum, well, that means it's likely to push down. What does 50-50 mean? It means that the area isn't broken. It's only potential. Different management. And then jumped in past trouble, let money make my exit decisions for me. That's kind of what happened. But what if you said, sell the fib, 3 ticks risk, and just, there's virtually no risk when the large chart is screaming. Let the large chart lead the way. So once you define an entry that you can take every time, once you define an entry that is repeatable, once you define an entry that has created more success for you than problems, then you just do the same thing every time. And what you find is you don't find yourself worried about what might happen. You find yourself focused on following your rules. And it's crazy, but it really does work out that way. All right. I like to get rid of the old ones. All right, Pete. We got 3 from Pete. It's a 3-peat. Why were you worried, Jonathan? Paul said he should have held for a bigger move. Paul, I should have been better looking. So, Jonathan, if you walk into a dark room and you're fearful, why are you fearful? Because you don't know what's going on. You don't know if there's something in there. You don't know if there's something to trip over, something to bite your face off of. You don't know if there's an axe murderer in the corner. It's not knowing. It's not understanding. It's having doubts in your head, right? That's what creates the problem, guys. But once you know that if I take this entrance, This is exactly what it takes to get me out. You couldn't care less what happens in between those moments. All right, so Pete, trigger strong. I agree. Odds favorable momentum. I agree. No clear path. I agree. Way to annotate. Pete knows exactly what he's getting into. Pete says with that level of momentum, I'm willing to take a shot. And with that level of momentum, it's probably going to find a mid-band from this bad top. And Pete, picture perfect. I don't think you could have done that trade any better. Is it a high probability trend trade? Hell no. Is it taking advantage of momentum, having a very clear risk parameter, and knowing where trouble is? Absolutely. Magenta 1-to-1s, Pete, are still small swing 1-to-1s. These pink dots come from this little move right here. It goes down and up, and the distance from here to here is the same as the distance from here to here. On a tiny little chart, it means nothing to me. Over here, it's pretty significant. Does that make sense? The only time I bring these into play is when it's on the NASDAQ large chart, because these can stop a market. Cool. I like it. I think you did this as well as it can be done. I think you know the challenges trading in determination conditions, right? That's your mid-band from the large chart. So if I have a bad top, that's my first target. That's it. That's your mid-band from the large chart. That's the first spot for a bounce coming from a bad top. Good stuff, man. And here we have that 50-50. We're up here, 50-50, super strong, coming from a strong top, and it's directly into, hey Morgan, have a good one, man. It's directly into a termination condition, right, Pete? So we're 2 for 2. Directly into a divergence low with all the triggers above it. So that's 2 termination conditions in a row. But let's talk about advantages. And guys, Pete couldn't have done this one better. Pete has a strong top. He has a no triggers through termination condition that reversed the market. This means that right here, the sellers said, let's go down, and let's go down with momentum, and let's go down with anger. And man, when they're coming down, there's odds favorable momentum. This area is more likely to break because of this top. Pete knows that. He's trading directly into a divergence low. Guys, the same look that stopped the market up here. And Pete says, let me go to the tiebreaker. And Pete, if you didn't say this, then you should. I have no divergence. I have strong triggers. And I have a tiny little window where the market's likely to continue. I'll take a shot. Pete, what happens if it goes all the way up to the top of the synthetics? Was your stop beyond the correction point? That's the only question I ask on this trade. Was your stop beyond the correction point? 2 ticks above it. Love it. And then as it comes down, 21 is about right here. Your 1-to-1s were at 19. Why not get paid at 19 instead of jumping out 21? That's okay. But then it sets you up for the 50-50 again. And you take it perfect from a strong top with super strong triggers. There's your first one not. And man, it's easy all the way down. And then with the weakening triggers, it pulls right back to resistance, and you're able to get out down here. And there it is. Nice trading, Pete. And then directly into a termination condition. So 3 for 3 on trading into termination conditions, right? 3 for 3. And this one absolutely whipped you. Well, and can I be honest for a second? You say you fucked this one up, pardon my French, because it lost. You don't feel like you effed this one up because it won, right? You don't feel like you effed this one up because it won. You feel like you effed this one up because it didn't win. That's normal. But the reality is, more often than not, trading in determination conditions is going to create losers, guys. More often than not having a clear path is going to create losers. But the cool thing, Pete, is when you have, and I love your pictures. There's so much great information. When you have a strong top, it's more likely to break. When you have a strong top, and this was no triggers through the reversal on the NASDAQ, it's more likely to win. But when you have a weak bottom, that mid band's the first target. Guys, excuse me just 1 second. I'll be right back. Actually, you know what? She can poop on the floor. So great stuff, Pete. As long as you understand that you're trading in determination conditions, you at least know what you're up against. And if you know what you're up against, you know that you need to manage aggressively. And if you need to manage aggressively, well, then you should have a set of key indications that say, this is what it's going to take to get me out because I don't have a clear path. And I think you do a great job with it. I really do. But because it's a learning room, because it's an education room, I'm obligated to point out that you keep trading in determination conditions. And for the general user that can't chart read that fast, that's a great way to blow out accounts really, really fast. Guys, if you'll give me just 1 second, my dog is insisting to go out, and I just don't want to steam clean. I'll be back in 1 second. Sorry about that, guys. All right, let's get back to it. Start clicking on some more pictures. Let me figure out where I was. Here I was. All right. Jonathan, you said you wanted to clarify triggers position on the small chart and importance thereof. You've got weak triggers on the small chart. That's it. There's no momentum on the small chart. I'm not sure what else you were wondering. I've got no momentum on the large chart. Well, I've got a strong trending market now on the large chart. I've got no momentum. I've got a couple divergences. I don't know. If we talk to ourselves in terms of advantages, I don't have momentum. I do have a clear path. I don't have areas inside of favorable large triggers. I don't know what else to say. Weak triggers into a termination conditions. You said you don't believe this fits our rules. It doesn't fit any rules I have. But you also say, but if I would have broken my rules, I would have won. It's a dangerous game, guys. It's a dangerous game. Deciding that what happens after your rules aren't met should determine whether or not you're taking a trade. Trust me on this one. I've done it. All right. Pete, directly into a termination condition. At least you're consistent. But let's go back to it, guys. Strong top, odds favorable, no divergence, strong triggers, and it works out. Pete, is it possible that a strong top or bottom coupled with no divergence and strong triggers might be what's making this trade easier to win? Guys, there's a great lesson about chart reading in that. If you can't put all that together quickly, you're just going to trade in determination conditions all willy-nilly hoping for the best. So even though I'm always obligated to tell Pete, you're trading in termination conditions, Pete's like, dude, Mark, I got a plan, brother. Termination, odds favorable, directly into a termination condition. You entered at 81.36. Stop loss at 48, where the market shouldn't go. Took profits at the fib. Great job. Who was that? Doug? Nicely done, Doug. Exact same trade. And it starts with the strong top. You'd be amazed at what momentum in a strong top will do for you. 50-50. There was divergence, but with all these things to bounce off of, you are more inclined to take the trade. I love that, Morgan. And Morgan's not with us right now. He's left. Odds favorable. Everything's up. 50-50. A million areas to create a bounce. Easy money. I have to send Morgan a message and tell him nice job. Everybody's plan's going to grow. The more time you spend with the indicators, the more likely you are to find more opportunities. The more simple you keep it in the beginning, the easier it is. There's the same 50-50, the same entry. Who was this? Was this you, Pete? No. Yeah? Pete, this was you, right? Did I click on that right? Hold on. Okay, this was Pete. And Pete, this is what I find interesting. You didn't take this trade, but you thought it was worth commenting on. So here we had a 50-50 with the potential to break from a really strong bottom in a clearly defined entry area with one line inside of favorable large triggers, and you chose to skip it. But you have absolutely no qualms with trading in determination conditions all day long, when this is about the best looking 50-50 I could ever hope for. Nice pullback to the mid band inside of large triggers. If you entered here, you'd be sweating a little. I wouldn't sweat at all. Stop just underneath the 1-to-1s. Sure enough, it turned and took off. So it's perfect, right? It's perfect. You didn't take it because you were in the kitchen. Yeah, it's hard to trade from the kitchen. Once John Novak's browser's out, you'll be able to walk around with your iPad, go catch those in the kitchen. And Pete, I got to tell you, I love that you, even though you weren't in front of the trade, you took the time to annotate it. Even though you weren't in front of the trade, you went back and still talked about advantages and how this isn't one that you want to miss if you find yourself not in the kitchen later. All right, Steve Diego. Strong triggers, odds favorable momentum, small triggers inside of large triggers, so weakening momentum. So taking the trade, but worth it with proper management. Wow, Steve Diego. You called it strong triggers with odds favorable momentum and weakening momentum in the same breath. As soon as it's done, Rob. That's all I know. It's not done yet. That's a tough read, Steve Diego. Strong triggers, odds favorable, but smalls inside of the large triggers, so weakening momentum. What if we let it be one or the other? And then you have weak triggers, and they're below one fib, but not below the other fib. So we have weak triggers. Now that one just started printing. So weak triggers in a clear path. Two divergences below. So you waited for the lowest risk entry. I like that. And you got the reversal bar. You let it start going down. So Steve Diego says, I know that my momentum isn't the best, but I do have areas inside of favorable large triggers. And I do have this. And Steve, there is no gap close to the large triggers. Otherwise, you would have been at the area. Waiting for the reversal bar is key. You didn't wait for the reversal bar, though. You got it on the way down. There, no gap close. No such thing as a gap close here. You get paid at trouble, and then a third divergence, and you hold it way up to break even. And you know that. You're like, wait a minute. Don't forget my trade management. But you get so wound up on entries, guys, adrenaline. Sometimes you forget to manage them. We all do. Nice one. Good job, Steve. Way to recognize issues. Then Paul, talk to me about your stop, Paul. You've got momentum and a clear path and no divergence and the perfect entry and a reversal bar to hide behind, and divergence wasn't true, probably. Your new mantra is if you enter a trade with rules met and place the correct stop, hands off the mouse until it goes against you. I love that. So you exited with divergence, Paul? I agree with your plan. Nice job, dude. And then Pete, that's hard to do, isn't it? Were you guys in the room yesterday for that live trade? When I refused to take profits early, when I refused to move stops? I hope it was impactful. Guys, it took a long time to be able to do that. You got to learn to trust, and you got to be willing to lose. Sun Tzu in The Art of War said that you have to put yourself in the kill zone to be successful in battle. You've got to be willing to lose in order to win, because you can't win every trade. And guys, if you base the merit of your trading on one trade, one win, one loss, you're going to drive yourself nuts. You really will. You will drive yourself nuts. Paul says, odds favorable, almost to the termination, perfect entry, quick profits, and then you exited the high probability trend trade right at the entry point. All right, guys, this is a lesson on stop placement. He hadn't reached the fib yet. Takes the perfect entry, gets paid, still hasn't reached the fib yet, and gets a pullback to resistance inside of triggers. That's your next short, guys. That is not that is not an exit point. That's an entry point. So you got to be willing. You got to be willing and know what kind of trade you're in so you know how to manage it. One divergence has never been an exit condition for a high probability trend trade. Paul, everything says down, the path is clear, the entry is perfect, the target is great, and then once again, you're out at resistance right inside of favorable large triggers. So understanding what you're in so you know how to manage it, right? Paul, is one divergence a deal breaker for you on a high probability trend trade? Let's just talk management for a second. And it's hard to do, right? But if your stop says go break even after the first profits, you did great. As you grow with the software, you're going to say to yourself, wait a minute, that break even entry, oh, you went break even plus one and it high ticked you. You have to say to yourself, that break-even entry doesn't make sense because all of my rules are met for a short trade. Remember what he said on management, guys, that you'll create a plan based on your ability reaching the indicators? In the beginning, Paul, 100% beautiful, love it, way to follow your plan. And as you grow a little bit, as you develop that confidence, and I'm going to tell you guys right now, when you start taking the same trade over and over, when you only have one or two trades in your plan, you know exactly how to manage it, and you know how to do it quickly. And then these little adjustments that keep you from exiting when everything still says the market's going down. I don't have the +1 rule, Paul. I have break even as how I teach it every day. I don't go break even if my large chart looks like this. I tell those mofos, you got to come get me. There's no way I'm moving stops anywhere near a mid-band inside of triggers when my large chart looks like this. I refuse, absolutely refuse to allow myself to be stopped out at a point of entry. But the thing is, Paul, I'm not saying trade your plan or change your plan. What I'm saying is let it be mechanical for a while, right? Eventually, you'll read this so quickly that your plan will change. Don't trade your trade plan because it got you once, right? Because, Paul, that's not what the problem was. The problem wasn't that you went break even +1 at all. You followed it beautifully. You did wonderful. Absolutely perfect. You followed your plan 100%. That's the first thing that I want to stress is you followed your plan 100%. So Paul, this is a victory 100%. Does that make sense? Because I can't stress that enough. So Paul, what you have to do is you have to say how many times with odds favorable momentum and a clear path does my plan put me in harm's way? And does it make sense to leave a little risk on the trade based on that pattern? And let me go to my spreadsheet real quick. I'm going to show you how you change a plan. You don't change a plan because it happens once or twice, guys. You have to go back and you have to start thinking about it, not in terms of I'm not willing to lose, I'm willing to lose, not in terms of I hope this, I wish that, but rather, come on, spreadsheet, open up. I'm going back to my old computer. It's coming right now. So one of the things that's on the spreadsheet is management, right? And one of the things that's on management is no exits where entry should be. When you have odds favorable and a clear path, and Paul, I've done this 100 times. I've done it 100 times. I've taken this exit 100 times because I didn't have the speed to go, holy shit, this is still a great trade. It's worth it to me. I'll exit, I'll get paid. But rather than getting stopped out on my other contract here, right? Do you notice how he jumped in afraid that it would go away and got stopped out right at the perfect entry? And this loser right here undid this winner here. That's the fear of missing out. So eventually you start getting to this point to where you're like, oh, wait a minute. My large chart still says this, so my small chart entry would be here, so my stop can't go there. And you embrace the language, no stops where the market should go, but rather only stops where it shouldn't. Weak bottom. Guys, you see those anything can happen triggers? 50-50. No divergence. I've got split triggers, so what do you think? From the lower point, from the higher point, my only area is down here. If I'm going to take a shot at a 50-50 trade with no divergence, well, it kind of has to come from the area right there at the large triggers. Does everybody see it? Do you see how quickly that happened? It's not a strong bottom. And guys, this has been a downtrend for a while. I have no divergence, strong triggers, potential to break, and I've got two lines inside of triggers where my rules say the market is most likely to continue. How quickly did that happen? What do you guys think? If it fits your plan, that's awesome. If your plan says it has to be a good bottom, well, then you don't have a trade. Pete, strong top, odds favorable, 50-50, right at the mid-band. One divergence doesn't scare you, pulls you right back to the best entry. No divergence again, right back to the best entry, and that thing just keeps going down until you get paid. Pete, gold freaking star. Over 7 grand with 2 shorts on oil, trading 4 contracts. You know, Pete, the one thing that I feel compelled to say is that almost all of your trades have a few things in common. I see you looking for that strong top and bottom, and I see you identifying it. And I see you insisting on odds favorable momentum. And I see you trading from areas. It triggers. And this has been consistent all day. Strong top or bottom, odds favorable, trading from areas. And even when it was in determination conditions, you were finding a level of success, insisting on having the strong top or bottom, the odds favorable momentum, and the manageable risk from trading from areas. So it's pretty cool watching you develop your trading plan and then starting to find that consistency. Because your consistency today compared to 30 days ago, it's different. Would you agree? Would you agree that you're a little more picky on what it is you're looking for? Absolutely. Are you finding that looking for less trades is producing more wins? And I'm kind of leading the witness here. Would you say that looking for less is producing more? That's one of the revelations that new users tend to have, is that as soon as I stop looking for all the trades, I start finding the best trades. As soon as I stop worrying about whether or not a trade wins or loses, but rather focus on the execution, I've got odds favorable momentum and a clear path. I have one area inside of triggers where this market is likely to continue. Guys, have I done everything that I can do? I have odds favorable momentum. I haven't reached an area. I still don't have a reversal bar, but I already know where I want that trade to happen, and now it's changing a little bit. Now my small triggers are returning to my large, and now my area is on the wrong side of the correction point. Only 2 trades in 3 hours, Pete? How on earth are you going to make any money if you're not in the market constantly? Oh, that's how. And guys, I guess that's what I'm trying to stress every day. And I swear Pete and I didn't plan this morning. We didn't plan him taking 2 trades in 3 hours and making $7,000. We're not in cahoots, guys. Pete is a Nexgen owner. He's a user. He's been with us for a while, and he's developed a plan based on his ability reading the indicators. And once you do that, the world is your oyster. Or oster. If I circle a tail with odds favorable momentum and a clear path, what's it look like on my small chart? Get back over there. There's the wobbly. And there it is, guys. All you have to do is learn the patterns. So if you are not sure yet, go circle tails. See what happens. You'd be amazed. Jonathan, everyone is different. The one thing that I've found is asking how long have you been doing this isn't a fair question, because everybody's different. You tell me, Cheetah. Let's talk about it. Cheetah says, Mark, I notice you're out of pictures. Let's create a lesson. So the first thing we have to do, Cheetah, whoop, that was the wrong chart. The first thing that we have to do is we have to define a strong top or bottom. And guys, if you don't know your definitions, how are you ever going to know? So let's do this for the new user. A strong top or bottom means a no triggers through the area termination condition that reverses the market. So let's go through and let's check it out, Cheetah. The market went down, didn't hit anything, and then it went up. So what do you think? Strong bottom? Adamos. In order for it to be my gosh, that was an hour ago, Cheetah. But no, not a strong top. That was an hour ago. Sellers did what they're doing right now, but we're not at a strong bottom. No worries. Triggers through the area. Can't ever be a strong top or bottom. So Adamos, when we talk about strong tops or bottoms, thank you for putting yes in there. That's not easy to do sometimes. We'll use this picture right here because we've got a lot of really awesome information. And I think one of the things that this does for us, guys, is you don't have to be in a trade. You don't have to be in a trade to get smarter. Oops. So I'm going to take that definition and I'm going to bring it over here. And I want you guys to see this. So a strong top or bottom is a no triggers through termination condition that reverses the market. So if I start all the way over here, price reaches support and none of the triggers break. Does this fit the first part? Everybody in the room. Is this a termination condition? First, you have to be able to say yes. Did any triggers break through support? None, right? So we're halfway there. Guys, this is nothing but a termination condition until it reverses the market. Now, this termination condition, because it creates the reversal, this is a strong bottom. So we'll go SB. This thing does squats, guys. Strong bottom. And then everything goes up. And price reaches Fibonacci resistance. And the triggers don't break through. So once again, I've got a termination condition, right? Why don't I trade into termination conditions? Because these things kill it. This is just a termination condition until it reverses the market. Whoops, wrong one. Once it reverses the market, now it's a strong top. So it's a two-part process, guys. Here, the small triggers break through, but the large triggers don't, right? It's still a termination condition. It still has the potential to stop it. Hell, it still reversed the market. But because the triggers got through, because the triggers pushed through that key area, this is going to be a weak bottom. This isn't going to be a strong bottom. And I want you to see what happens. From this weak bottom, they push up to the middle of nowhere. The momentum gets lost, and the market continues down past that weak bottom. Below where it reverses, so Adamos, man, thank you. You're putting all the great stuff. In order to be a termination condition, so let's define this on this picture too. In order to be a termination condition, two things have to happen. Price reaches an area, triggers remain above support or below resistance. So that's the only way I can ever have a termination condition. So here, price reached the divergence low, but the triggers break through. Price didn't reach this support, so it's just not even in the equation. The same way these one-to-ones aren't in the equation, the same way this Fibonacci support isn't in the equation. Does that make sense? Both lines, Steve Diego, always. Great question. I consider the small triggers are 2 lines, guys. And for the small triggers to break, both lines have to go through. If one line ekes over, I mean, we're good, but we're not always to the tick good, right? So taking the idea of termination conditions. Damos. Let me see if there's an emoji that illustrates. Just kidding. So let's go through it, guys. Price didn't reach an area. Did we create a termination condition here? Price didn't reach an area. Could this ever be considered a termination condition? No. But Steve, it reversed the market. Is it a strong top? No. Perfect. And guys, this is why language is important. And this is why when you're learning the software, associating looks with language is very important. Because let's go to the live market. And if you begin using the language, price didn't reach an area. It's not a termination, can never be a strong bottom. Small triggers have returned to the large triggers. It can never be odds favorable momentum because I know that in order to have odds favorable momentum, I have to have a separation between the small and the large. Has nothing to do with bars, Paul. Has nothing to do with bars. Not a thing to do with bars. Let's go back. Great question. If you're counting bars, you're making up rules. True story. If you're counting bars, you're making up rules. So this termination had 1, 2, 3, 4, 5, 6, 7 bars until it reversed the market. So let's do that. We'll put 7. It was 7 bars before it reversed the market. This termination had 1, 2, 3, 4, 5, 6, 7, 8 bars before it reversed the market. And I think that are the only 2 strong tops and bottoms there. All right. So let me go back to why I think language is so important. A strong bottom is a no triggers through termination condition that reverses the market. So Paul, just a termination condition. When it reverses the market, it's a strong bottom. Just a termination condition. When it reverses the market, large triggers roll from green to red. Now it's a strong top. Pretty cool, right? And that stays consistent. So let's scroll back. No triggers through termination condition. Once it reverses the market, now it's a strong top. That's the whole thing, Paul. That is the whole basis for strong tops or bottoms. Termination condition stops the market. When it reverses the market, it's a strong top. When the large pinch and roll. Termination condition stops the market. Once it reverses, it's a strong bottom. Pretty cool, right? Termination condition stops the market. It does become a strong top, but right into a termination. Termination condition reverses the market. Now it's a strong bottom, but that only lasts right up to a failed 50-50. So strong tops and bottoms are great, guys. Strong tops and bottoms don't guarantee success, but they at least give you a fighting chance. So let's talk rules real quick. You guys are going to love this, or you're going to hate this. I don't know which one it's going to be. We're about to find out. So on the marked up picture, one of the small lines made it through. It's a strong top. Yep. If one small line makes it through, one line of the small triggers, and here it didn't, yeah. So one line makes it through, but notice how they both don't break, Steve? But here both lines of the small triggers make it through. There's no such thing, Rob. There is no strong top or bottom forming. Because that would suggest that you know what's going to happen. Does that make sense? To say that there's a strong top or bottom forming would suggest that you know what's going to happen. But what you can say, Rob, is I have a termination condition, and if the large triggers pinch, roll, and the direction changes, then it will be a strong bottom. Do you see the difference? No worries, Steve. That's what the classroom's for. And Rob, I'm having trouble opening your link. I may have to reboot Discord, guys. Discord hates me. If you could put it in as a screencast link, that's even better. Because for whatever reason, it won't let me. Here, let me copy the link and see if I can do this. Hold on. Let's see if we can beat the system. So this is it right here, right, Rob? Potential strong bottom forming, or just a termination condition that's going to create a little bounce before it continues down. I just don't know. So your large triggers have pinched, rolled, and the market is now going up. Then there you go. It really is that simple. All right. So let's do this. So guys, on the most current bar right here, did I have odds favorable momentum, or did I have a visual weakening of momentum? What do you guys think? I drew an arrow on odds favorable. Separation between the small and large. No lines of the smalls inside. And this is the first signs of weakness. When one of the lines of the small triggers work inside, right? So my job as a rules-based trader. Whoops, hold on. Go back, okay. So first sign of weakness tells me no odds favorable momentum. Is that cool? So we can say I don't have the absolute best of the best. Is everybody good with that? This is how I talk to myself when I'm looking for a trade, guys. Let me go to my first rule. And my first rule says I don't have the best momentum, but I do have momentum. So I'm gonna go through. Do I have a clear path? So in order to determine if I'm a brand new user, I have to say to myself, did price reach an area? No. Cool. Are all triggers above previous area? Yes. I have a clear path. Rule 2 is met. You guys see how I did that? I didn't guess, I didn't hope, I didn't wish or want or anything. All I did is I said, let me literally say out loud the rules for a clear path, and let me see if it meets those rules. Is everybody with me on this so far? This is how new users should be looking for high probability trend trades. Do I have momentum? Do I have a clear path? And then guys, this is where language is important, and this is the one that you guys hate because it keeps you out of trades sometimes. Do I have an area inside of favorable large triggers? This is rule number 3. Not so I have. Do I have an area inside a favorable large trigger? So let me find, there's my large. There's my synthetic. They're definitely favorable. They're overlapping. But guys, my midband is on the wrong side. My midband is beyond the correction point. Is rule number 3 met? Work with me, guys. Do I have the rules met for a high probability trend trade? I don't, right? I don't have the rules met for a high probability trend trade. And I want you to see something. And I always encourage you guys to build one of these. Because if you do this, it's going to blow your mind on whether or not you take trades. It's going to change your entire world. I'm going to pull that up over there real quick. Sorry, my computer is 32 flavors of trouble right now. So if I don't have momentum, stop it. If I don't have momentum, if I don't have areas inside of favorable large triggers, how do I feel? And ask yourself this. How do I feel entering a trade when only 33% of my advantages are present? And that was horrible spelling. Sorry. I've got such a lag on my computer right now. So how do I feel about taking a trade when only 33% of my advantages are present? And if you start talking to yourself, guys, if you start saying to yourself, these are my advantages, this is what I see, this is where I'm at, these are what are in play, and these are what are out of the equation right now. What happens is you start saying to yourself, you know what? I'm not going to jump in arbitrarily at the mid-band. I'm not going to get stopped out for a loser here, hoping that it does something else. As a brand new user, this is kind of a safeguard to keep you out of trouble. But you won't be a new user forever, and this is what people forget. And guys, there was your potential entry, I think, and it's just absolutely cratering. What happens is you start to grow as a trader, and you start to recognize patterns, and you start to identify advantages beyond that very basic advantage. Whoops, Joel clicked on the wrong one, sorry. And Joel says, with 50-50, maybe not quite a 50-50, but it's coming from a strong bottom, with that much momentum and no divergence on the pullback, and the tiniest window of opportunity inside of favorable large triggers, Joel feels very comfortable getting into this trade and riding that wave of momentum until a small chart says, hey, here's some key areas, let's get the hell out. Joel, this is absolutely beautiful. And Joel puts his rules on every trade, and he has no questions about whether or not he's breaking a rule, and he has no questions about whether or not he has advantages, and he has no questions about what he's getting into. He knows that this is a 50-50 trade. He knows that the momentum is outstanding. He knows that divergence can kill it, so he didn't take it with divergence. And he knows that if he gets in with the least amount of risk, what a wonderful trade to ride that momentum. I love this trade, Joel. Guys, that was your mid-band. Not inside of favorable large triggers. It's just the target. It doesn't mean that it's going to bounce. Didn't make it to the fib. Pulled right back to the mid-band. Finished the move to the key areas. There's an example. Didn't make it to the fib, pulled right back to the mid-band in support. Finished the move to key areas, Steve. Didn't finish the move, pulled right back to the mid-band, continued down to the key area. I'm telling you guys, we're not the only people that know about these areas. And when that market turns from the middle of freaking nowhere, pretty awesome. So Steve, you'll go back and you'll see this a lot. So that was a bad bottom, right? And they push up to resistance and the sellers are like, dude, we're not done. But sometimes the buyers have other plans. It's not guaranteed it's going to continue down. And sure enough, the buyers said, but no, we wanted this number. And then they let the sellers have it. They let the sellers continue on their way down. So you're going to see this a lot. Bad top, right back to the mid-band, continue to the next area. This is what my brother calls unfinished business. Bad bottom, back to the mid-band, and then they kind of get stuck in the middle before the buyers take over. Sometimes a good bottom, back to the mid-band, retest the area. Some sellers forgot to take profits, and then they let the buyers take over. Everything is patterns, and it's pretty amazing. If I get towards a mid-band, my large triggers don't follow, no long trades. It's probably going to close the gap back to those triggers. That's the gap theory. Over and over. There's a bad top, right back to the mid-band. Large triggers never blink, and it continues up. So Steve, I say it a lot, and I mean it. Your best lessons, a lot of the times, your best lessons aren't coming from trades, guys. Your best lessons are coming from back and researching. So check it out. Bad bottom, the buyers got a good push, and then when your rules weren't met, the sellers took back over. Let's see if they go to 79.96. Now they're at a line in the sand. Now they're at that divergence low. This is where the buyers stole momentum last time from the sellers. Are they going to do it again? Does anybody know for sure? That's what I want you to ask yourself. Does anybody know for sure if the buyers are going to try again right here? I don't. I have no freaking idea. Let's see what the reaction is. Let's see if the buyers do anything right here. There may be too much power in the sellers, but I do notice that my momentum is slowing down on my large chart. I do notice that none of my trigger lines are breaking through the area. I can tell without having to take a trade that divergence just printed on my small chart and my areas seem to be on the wrong side of those triggers. I don't know what that means. Oh, over here on the small chart? Yeah, so are the one-to-ones. And then Pete, I know you love mid-bands. I like the word areas. Because my high probability trend trades don't just come from mid-bands, they come from fibs, yellow one-to-ones, and mid-bands inside of favorable large triggers. Pretty cool, right? But a lot of people do get hung up on mid-bands. I don't know why, because mid-band's probably fun to say. Fibonacci's difficult to spell. And one-to-ones is just too many words. Who's got time for that? But it's lines inside of those triggers that can create a bounce. So the sellers may push. They may have some giddy up. But even though it was a 2-bar reaction, does everybody see the reaction right there? Can we agree that somebody was at that blue line with an opinion? And this is kind of what I want you guys to get in. I can wish that it goes down. I can want it to go down. I can hope it goes down. But my rules said that I don't have a trade. My rules said that I'm void of odds favorable momentum the same way I was up here. My rules said that I'm into a termination condition. And my rules said that I don't have any areas inside of that correction point. So once again, I have to ask myself, am I willing to take a trade with only 33% of my advantages present? And again, your answer may eventually be yes. But you see how, guys, I'm not talking about news releases. I'm not talking about stochastic whatever, because I don't even know what that crap means. All I'm talking about is momentum, clear path, and entry area. And I'm giving myself two options. Either to take a trade because the rules are better, or avoid it because it's not. And here's the thing, guys. If the market crashes down, does it mean that my rules are wrong? Large chart weakening and lines above. And Pete, that's cool. Weak triggers for sure should be a red flag. I know termination conditions aren't for you, Pete, but this isn't coming from a strong top. Yeah, I don't even know what that is, Rob. I have the beautiful advantage of having no market experience before Nexgen. So I have trouble creating opinions based on patterns outside of what I teach. You only speak in Nexgen. I really do. But everybody sees, right? I don't have rule 1 or 2 met here. Let me play the John Novak trick on you. This is what he used to do to me. Exactly, Steve. This used to be my favorite thing that my brother would do to me after I took a loser. Is this my best look for a short, guys? What do you think? Is that my best look for a short? Oh, right on. D says no. George says no. I agree. So let's try this. Let's back up. We'll make it a little bigger. Is this my best look for a long? And guys, it's no secret that I think language is very important when you're learning something. It's just not, right? But Mark, look at the momentum. Guys, you see the momentum, right? It's odds favorable. How could this not be my best look with odds favorable momentum? Right? Hold on. How could this not be my best look with a clear path? Guys, how could this not be my best look with a clear path? Let's see if we get lucky here. Hold on. How could this not be my best look with an area inside of triggers? But Steve, weak top doesn't even work its way into the trifecta, does it? Weak top never even makes it into the most simple way ever. If you're a brand new user and you insist, if you say to yourself, the only way I will ever risk my money on a trade for the first 30 days, the only way I'm ever going to enter the market in the first 30 days is I'm going to try because we're all learning. I'm going to try to absolutely positively insist on momentum, a clear path, and an entry area. And all you're doing, guys, is you're training your brain to know what you're up against. Right now, I'm up against weakness and not having a clear path. And it may continue down. Hell, I don't know. And I might have said, well, I'll take it with a reversal bar, but it doesn't change the fact that the rules aren't met. And then once you start doing this, once you start speaking to yourself in terms of momentum, once you start talking to yourself in terms of a clear path, well, then you take the Pete approach. Let me see if I can find one of Pete's. Sorry, Pete, putting you on the spot. You take the Pete approach, where you start saying, if I have a termination that reverses the market, that lesson in strong tops and bottoms, and my momentum is better than I've ever seen it in my life, and my rule number 3 is met with the smallest amount of risk, you start saying to yourself, you know what? I'll get in right here. It's worth $100 risk to me to see if I can ride that momentum up to trouble. And guys, there's nothing wrong with that. If you have a strong top and odds favorable momentum, you got a good chance of that retracement. But if you got a bad top and weak ass triggers and directly into a termination condition, guys, you have to start making harder choices. Some of you might say, but Mark, all my triggers are below 1-to-1s. Isn't that likely to stop the market? I don't know. Maybe not without momentum. And what you run into, guys, is when these areas start falling beyond the triggers, beyond the correction point, it's indecision. And you have to ask yourself, well, is it going to retrace to here? Is it going to retrace to here? Do the buyers want it to go to here? And the reality is you just don't know. Or are the sellers just going to blast it through? Hell, I don't know. So you start talking in terms of advantages. So we have a termination. Is it a strong bottom? Might as well turn this into a lesson, right? Is it a strong bottom? Price reach, no triggers through. What do you guys think? And it's okay to have the wrong answer, guys. Steve says yes. Jonathan says yes. Pete says yes. I love you guys. Jen says yes. Hold on. Let's go back to the rules for a strong bottom. What do you say? Where's that picture we did? Paul gets this scratch and sniff sticker. A strong bottom means that no triggers are through the termination condition, but it's got to reverse the market. It's got to reverse the market. Why is language so important? Because until these large triggers pinch and roll, guys, it's just a termination condition. That's all it is. It won't be a strong bottom unless the large triggers pinch and roll. A termination condition should be enough to keep me out of it. But if these large triggers roll and set me up for a long, man, that's the best long I could take. This was just a termination condition all the way up until those triggers rolled. Triggers never did anything here. It continued down. I have those every now and then, Pete. But it's not even a point. It's just the rules say. The rules say in order for this to be a strong bottom, it's got to reverse. That's it. And once you learn the language, guys, you're not going to make the mistake. And so often, you're like, where's the trade? Where's the trade? Where's the trade? Where do I make money? The market's going up. Where do I make money? Talk to yourself in the language, right? And this is the one thing that I would stress to people. Some people are visual, and some people are auditory, and some people need words. I'm a words person. But if you go through, man, I don't have a strong top. Maybe I should build a strong top or bottom section, right? One thing I did do for you guys is I'm creating these little 2-page Word documents. So here's strong tops and bottoms for the new user, guys. I typed this up, printed it out. I'll drop it in the room for you. No, Jonathan. Large chart, buddy. Large chart, termination. Large chart, termination. Large chart, strong tops and bottoms. This is a small chart. This is an entry chart. This is a who cares chart. But what is the small chart telling you? Jonathan, I'm glad you put this. Small chart's showing you that change is happening, isn't it? Small chart's starting to validate this termination. Now it's a pivot stop out with a second divergence, the small chart. No, Pete, it hasn't reversed the market. Large triggers. Maybe I need to define reversal. Large triggers. Pinch and roll. I think I just found a confusion point. The large triggers have to pinch and roll. Until it does, these things are still aiming down. Your big, bad, slow-moving average is still aiming down. They're trying now, aren't they? Do you see them starting to pinch? Do you see the immediate momentum? There's a mid-band. Large triggers are a full bar away. Can anyone tell me what that means? If I hit the mid-band and these large triggers are all the way down by the reversal bar marker, gap theory. It might pull back to them, guys. It takes a second for a good top or bottom to form. It really does. It takes a minute for a good top or bottom to form. But we're kind of watching it happen. So good tops and bottoms, strong tops and bottoms. First it's a termination condition. Now it's a strong top. First it's a termination condition. Now it's a strong bottom. It's that reversal. It's that no triggers through and the reversal. So that little snippet there gives you a lot of information. Large triggers are down. Termination with no triggers through. Small triggers are up. Some of you are going to take that first shot at momentum, which says that small triggers have to break through the area and price has to snap back to it. So if you guys are one of those, let me try the momentum because of the good bottom, this is where it sets up, right here. If you jumped in, you don't have any place to put your stop. It is difficult, isn't it, Pete? You know what we call that? The fear of missing out. That is the fear of missing out, forcing you to make bad decisions. How much oil is traded every day? About $4 million, guys. About $4 million worth of crude oil is traded every day. Where's my calculator? Was that 4 million barrels? 1, 2, 3, 4, 5, 6. Times, let's just call it $80 a barrel then. So how about $320 million? So let this sink in for a second. Is that billion? That is billion. Guys, I suck at math. Just English lit major. But you're getting the point, right? If there's $320 billion worth of potential money every day going up and down in crude oil, hold on, let me clear everything. This is the percentage of the daily movement that you need to make to have a six-figure income. This is the percentage of the daily movement to have a six-figure income. You don't have to be in every trade. You don't have to be in every move. You don't have to catch every top, every bottom. And if it doesn't set up and give you an advantage, learn how to sit on your hands and do nothing. Wouldn't make a dent. And that's why I tell you guys, you're not in charge. You'll never be in charge. This guy's in charge. E. Webster, I'm trying to open it. Discord's not letting me open. Hold on one second. Let me see if I can. Oh, there we go. Just takes a second. So guys, check it out. Termination condition. Smalls turn up. Smalls turn up. Smalls turn up. E. Webster says, I'm going to ride that immediate momentum because of the good bottom, but I know exactly where the problem is, and that's where I'm going to get paid. And this is how you turn chart reading into profits. E. Webster, it's beautiful. It fights triggers. It's not coming from areas, but it's an amazing trade. And I know that it fits E. Webster's plan. Guys, the people that move the market are apex predators, and they have more money than you will ever have behind them. And they create trends, and they establish momentum, and they react at these areas. If you're a remora, if you let them react to the area and tell you that the area is likely to hold, you can do what E. Webster did, and you can find a way to take advantage of it. You begin to recognize the patterns that the people in control make every day. Let them get the work done. Take advantage. Take your little chunk out of it. Don't be first. Those guys get eaten. Just take base hits. Someone in the other room, millions a day, she does nothing, right? Someone in the room the other day, they said the first million is the hardest. He said, when you're a day trader, the first million is the hardest. Has anyone ever had to lose weight? You don't have to answer. I have. And I was a personal trainer for years. And I used to help people lose weight. And if you say, and we've all done it, I need to lose 50 pounds. 50 pounds is overwhelming, isn't it? 50 pounds is so much weight. And if at the end of the first week you're down a pound, it feels like a failure and you want to quit. Anyone else done that? I've done it. I did it. I've had my 50-pound life. And that's it. But here's the deal. That's awesome, Rob. What if you say I want to lose 50 pounds and I say to you, let's do 2 pounds a week. You're going to be alive as long as your heart is pumping. What if we lose 2 pounds a week? At the end of a year, with small manageable goals, you're down more than your goal, guys. And you feel good, and it's the kind of weight that stays off. So Malcolm, you get it. What happens is we create these unrealistic goals for ourselves. I need to make $1 million in the market. No, you don't. You need to make 500 every day and learn how to do it consistently, and then just trade more contracts. When I was 35, I woke up fat. I was thin when I was 34, and I went and I lost 50 pounds, and it's a daunting task. All right, so Josh, odds favorable, everything's down. You jump in and jump out. That's it. Jump in, jump out. Let me make 2 ticks, pay some commissions. The JTFI trade. And guys, when your little jump in trades fail and the large chart looks like this, they turn into trend trades, don't they? Josh, beautiful entry. Something dried up or got sand in it. You jumped out quick. I'm not sure why. But then you have the wherewithal to get back in and make money again. So Josh, your entries are great. You know exactly what you're looking for. Odds favorable, clear path, life is good. You're letting the small chart scare you out a little bit. And that's okay, because once you have great entries, management's the next piece of the puzzle. So Josh, I'm assuming that your management plan says $100 on the first contract, right? $150 on the first contract, that's the $52.25. Does it say, oh, stupid math. I don't know. Does it say like $178.50 on the second contract? And Rob, getting in is difficult at first. So Josh, what I always say, and this is, Kenny and I had an awesome talk about this one day. So let's turn this into a lesson real quick. I want you to remember a magic phrase. All right? I want you to remember a magic phrase, and this will change your life with management. What has changed? And this is how I began to manage trades more effectively. What has changed? So, from your perfect entry, at your first exit, let's define what has changed. And it's okay, it's predetermined. But the only thing that's changed is price is now on the correct side of the smalls. And that's pretty cool, right? And then if you're in and you're thinking about jumping ship and you're getting scared and you ask yourself what has changed, my smalls are now in favor. Every chart says momentum down with nothing in the way. And if you said that to yourself right there, do you feel like you'd be inclined to take an exit? Probably not. And it takes practice. It does. It takes practice to do it. And the same thing is true here. With your perfect entry, at the time of your first exit, that's what's changed, absolutely nothing. And at the time of your second exit, nothing. Nothing has changed. And what it does is it helps you on this small chart to trust the large chart. And man, I'm telling you right now, it takes time. Because as long as you have something to lose, there's going to be that little devil on your shoulder saying, hey, Josh, take the money, take the money, take the money. And I had to do that. I had to say to myself, what's changed? And then once you realize, and Josh, here's another lesson that'll help. As long as price is on this side of those small triggers, it's going to continue down until it gets to the other side. As long as price is left of these small triggers, you're in a good spot. Management's hard, man. I think management's harder than entries. I think entries are easy. I think anybody, if you stay focused, can learn entries inside of 30 days. I'll stand behind that 100%. If all you look for is high probability trend trades, you will understand it within 30 days. If you look for every trade, you're just going to absolutely fudge yourself into missing a lot of opportunities. I don't swear. That stuck out because I burped or something. I don't know. Adamos, open in your link right now, bud. So keep it focused initially, right? That was E. Webster's. Hold on. Let me see if it'll let me copy the link. Nope. I don't know why it keeps going back to E. Webster's. Give me 1 second, guys. Let me do a quick little Discord reboot so I can see Adamos's chart. Discord's messing with me right now. It's trying to stress me out, but it won't, because let's be honest, it's just Discord. 1 second. You guys can probably hear me, but you won't see me for a second. Don't freak out. You'll be okay. Here I come. But this will let me open up that picture so we can get a little feedback going. It's on the way, guys. I can't decide if it's my computer or Discord that's creating problems. Or maybe a combination of the two. All right, coming back. Here I come. Can you guys still hear me? Everybody can hear me, right? Like speaking from the great beyond. Let's see which screen it gave you. There we go. Hey, no worries, Cheetah. I love doing it. When we have time, I love doing it. Man, open up. Hey, Adamos, do you know how to do the screencast link? Where you take that exact same picture that you took, but you upload it and drop that link in the room? Discord is completely blocking me right now from opening these, and I don't know why. Oh, hold it. I think I got it. Here we go. Here we go. Are you using TechSmith Capture? It finally came up. I got it. Oh, print screen? Okay. No worries. Then we're good. Let's see what we have, man. Termination reverses the market, gives odds favorable momentum. Odds favorable momentum, not a clear path, right? Because the large are still below. Does that make sense? Not a clear path yet. So it's a 50-50. You had no divergence. Your areas are in between the correction points. So if you get into the one right above the synthetics, then your stop is right below the large triggers. Absolutely perfect. And just money all the way to the pink line. Strong bottom because it's a no triggers through termination that reverses the market. Rob, that's the one that you called. And what does a strong bottom do? It makes the 50-50 more likely to win. And sure enough, it did. Sure enough, it did. Absolutely beautiful, Adamos. Great trading. Strong bottom, 50-50, reversal bar. That's my lowest point of support inside of favorable large triggers. That's my highest point of support inside of favorable large triggers. Does that make sense, everybody? Not a clear path. Odds favorable momentum. Comes from a strong bottom. The fib is my highest point of support. The mid band is my lowest point of support. And now it's up to the small crowd to do something. That's how quickly your reads can happen. All right, Pete. Twice it pulled back to the mid band outside of triggers. Is this the NASDAQ thing? Kind of. NASDAQ's a cluster fudge. So, Pete, let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So what we're looking at right here is we're defining a strong trending market. 30 bars in the same direction, breaking through more than 3 areas. And what NASDAQ will do, and NASDAQ's not like anything else. Guys, NASDAQ is tough. So let me show you something kind of cool. Pete, I'm going to give you a picture. Is that a 10-2 that you're trading? Where'd it go? Or is that a 13-2 that you're trading? Because it matters. I can't tell. 13-2 or 10-2? 10-2. And I just want to talk about patience on the NASDAQ. And there's 2 things. The first thing is this one is directly into a termination condition. To hell with that trade. Don't want it. Because you don't have odds favorable, you don't have areas, 66% gone. But this one right here, with everything up, with the path clear, and you're saying to yourself, man, this support's likely to hold with this look. On the NASDAQ, on the 10-2, when I get divergence from the high, my rules say wait for a reversal bar. And if it never forms, I don't enter. So there's your reversal bar entry. From support, likely to hold. Is it guaranteed winner? No, but at least now you have a fighting chance, right? If this were a 13-2 in the NASDAQ, I wouldn't dream of entering until I got a close on the other side of that momentum indicator. Two different entries. And this is the thing, Pete, is you're under no obligation, ever. You're never under any obligation to just jump in. It's okay to wait for confirmation. When you're like, man, it should go up, this area should hold, it's pulling right back to it, I don't want to just jump in. Because my rules aren't met and it could absolutely slaughter me. Yeah. But at least if I wait for confirmation, then I know exactly where my stop goes, right? 2 ticks below it, I've established risk. And that's kind of the way you're going to grow a little bit, guys. As you see more, as you do more, as you understand what you're up against. And then I made this one this morning, guys. Paul, this was for you. You requested this. I didn't make it on a video, but what I did do is using buy or stop orders. Buy and sell stop market orders. Just drop that in the room. Having a stop order right where that reversal bar prints saying it's not perfect, I need confirmation. This is where I'm getting in. Good stuff. Hey, guess what, guys? You made it. Oh, and guess what else? You're long. And your stop, because you got a reversal bar, is right there. Oh, you didn't get a reversal bar. I did on my range chart. So guys, 50-50. Area likely to stop the market. Technically, your stop has to go all the way down here. I don't know how I feel about that. At this point, I'm hoping for a reversal bar. And I'm going to have to sell one at 67 to collect $100. And I'm going to have to sell one at 77 to collect $200. You guys want to work this one through? We've entered. And there's nothing to do right now. My stop is where the market shouldn't go. My first target's at $100. If I get a reversal bar, I'll reduce my risk 2 ticks below the bar. We're going to kiss plan it, guys. In a real world scenario, on a 50-50, I probably wouldn't leave that much risk on the trade, but let's just go through it. And that fib came and printed on us there, but that's okay. So I got my reversal bar. So I am 2 ticks below the reversal bar, 7 ticks of risk. Is this trade high probability? Everybody ask yourself, is this trade high probability? No. How come? Because I don't have a clear path. Is this a trade that wins 70 to 80% of the time? No. Because I don't have a clear path. Do I have momentum? Absolutely. Does it have the potential to break? You better believe it. Is it coming from a strong bottom? Hell yeah. No divergence, strong triggers, right back to the area. The only thing that will take me out of this trade, ladies and gentlemen, whoop, there's my first target. I'm going break even. The only thing that will take me out of this trade is divergence. My rules say the only thing that will take me out of this trade is divergence. Otherwise, I have to get stopped break even. I already got paid on my first contract. All I'm doing is following the KISS plan, guys. This is how we finished class yesterday, too. Only I had it on a 4 lot. It was a $500 winner. If divergence will take me out of this trade, I'll know divergence is true 1, 2 ticks below this reversal bar marker. I have the potential, but guys, this is just potential. Me and Susie had a great time at the movies. We had a wonderful dinner. We even danced a little bit. But until our lips touch, that goodnight kiss is only potential. Don't exit on potential. Josh, what's changed? Now I'm trading on the correct side of my small triggers. Now my small triggers are starting to point up in the direction of the trade. Some of you want me to take that $120. Some of you say, get out, Mark. What if something goes wrong? What if everything goes right? What if that market continues up with all this momentum? What if that market doesn't have any intention of stopping until that red fib? Doesn't matter. I won't be in that trade because at 77, my rules say to jump ship. What's changed, guys? Has anything changed? Do I still have odds favorable momentum? Yes. Do I still have the potential to break this area? Yes. Now I'm on the correct side of my smalls. My smalls are trying to roll. There's going to be fluctuations. It's just a 5-1. It's a tiny little chart. I've got zero risk and I've already made $100, guys, and the worst I can do is 20 bucks on my second contract. Is there any reason I should exit this trade? Is there any reason? No? All right, let's run it out. Well, this is how we'll finish class today, guys. We're either going to be up 120 bucks or we're going to be up 300 bucks. Is anybody going to be mad about either? And here's the deal. If you don't understand any of the whys right now, you have to raise your hand and ask a question. Because when the trade's over, I'm going to go have lunch. I have 2 contracts. Oh, sorry. Because I had to put that in manually, I need to drop that down to 1. Because I didn't have my stops and targets in place, Adamos, I put my stop in manually. Thank you for noticing that. Because if it hit my stop, it would have put me short a contract. So, Adamos, I owe you a shiny nickel, my friend. Good eyes. This is why you should always have your stops and targets in place. Because even if you've been doing this for 4 years, you might make mistakes. Sure is a slow-moving market, isn't it? It gives me a lot of time to think about all the things that could go wrong. Gives me a lot of time to think about all the challenges that could be before me. But you want to know what the truth is, guys? My rules are very specific. And I don't care if it wins or loses. I already know it's medium probability. I already know the area is not broken. I already know that divergence could ruin this trade. So the potential is there. My stop's where it's going to be true. I could even put a finger over the close button in case it happens. But I've gone from being up 130 to down 90. $40 swings on the small chart. But the weird thing is my large chart still looks like odds favorable momentum, doesn't it? Even though there were fluctuations. Guys, I love it when we can take these trades together. I love it when things work out like this. Because this is what you have to do. You have to talk yourself through everything. What do my rules say? And if you don't know your rules, they need to be printed out right in front of you. But Mark, I don't have rules for a 50-50 trade. To which I lovingly reply, the hell you don't. That would be better if they came right up. Strong top or bottom, we had it. Odds favorable, we had it. Smalls outside of the large, we had it. No divergence, we had it. Initial stop, first stop movement, first target, second target. If divergence prints, exit trade. My stop is where if this divergence is true, it takes me out of the market, Steve. It could also be, if I'm quick enough and I can commit to my rules, I should be at break even. And if divergence is true, I'll mash this close button. Does that make sense, Steve? My rules say break even. Guys, I'm comfortable with my ability to hit the close button. Not everybody is. Stop at the reversal bar marker wouldn't make sense, Steve, because divergence wouldn't be true. It's above support. Isn't this just another 50-50 trade? Might be. We'll see what happens, guys. But I'm going to keep my finger over that close button. And if divergence is true, my rules say that I have to exit the trade no matter what I want to have happen next. And it means that I might exit with divergence and that thing runs without me. Or it might mean that it just goes up. And guys, this is what we do every day. So, Izzy got game. How'd you do today? A little confusing, maybe? There's a lot going on. How do we feel, guys? You guys feel like if you keep it simple, it will be? If you make it difficult, it will be? You can see the fight, right? Fights happen at key areas. You guys are watching it right here. That's what gives us pushbacks. Let them fight. Who cares? I've got the best entry. I already got paid. And I've got no risk on a trade, guys. There's nothing bad that can happen to me. There is not one thing negative that can come out of this trade. Not one. But if I get caught up on these fluctuations, isn't it easy to jump out and then miss the move? And that's what you got to realize, is missing the move because your rules aren't met is great. Missing the move because you got scared means that you don't trust your rules. And it just means that you got to take a little more time with your rules. Trust doesn't happen overnight, guys. Trust is an accumulation of repetition. Trust is an accumulation of pictures, of feedback, of study, of practice, all these things that have to come together to create a trade, to create a management plan. Man, we were down to $60 and now we're up to 110. And we're still on the correct side of the triggers. And we're still above the fib. And we still had the perfect entry. And we still got paid once. And we still have odds favorable momentum. Adamos, I've been doing this for 4 years and I know my rules like the back of my hand. It's easy for me to sit here and do this. But if you are brand new, you've got to be vocal, guys. You've got to be willing to scare the dog, talking out loud. What are my advantages? What's my challenge? What do my rules say? And just keep doing it through the whole trade. My mouth is dry because I'm doing it. Don't get caught up on these fluctuations. This bar has gone through $100 worth of up and down. This one bar on the small chart has gone through $100 worth of up and down. That's nerve-wracking for the new user. And some of you might just say, oh, I can't handle it. I'm just going to exit here, take $200 on the trade and wait for the next one. That's cool if that's what you have to do. My plan says I either get hit break even, exit with divergence, or hit my second target. Those are my only options. Guys, it looks like we're going to have a minute to answer any questions if you have them. This is fun for me. And I'm glad that this set up the way it did. And I'm glad that it's not just running to the target. I'm glad that it's forcing me to revisit my rules, to revisit my exit conditions, and to remind myself why I'm in the trade in the first place. Because the termination condition with absolutely no triggers through it reversed this market. Because it produced the best momentum that I could ever hope for. Is it going up? Looks like it is. So from YouTube, Paul, if you go to the 60-second video series, guys, this is 60-second videos covering a lot of common concepts, breaking them down individually. I've been working on this lately. Did I plan this? Yeah, I made some calls, Steve, so that the market would give us a rules-based entry. And then I told him, I said, guys, don't make it easy for them. Make them sweat it out. Get them a little nervous. Make them wonder if they really do have odds favorable momentum. Make them wonder what it's going to take to get them out. I still love everything about this trade. Guys, this is the kind of trade where I'd just go make a sandwich, come back, see what happened. Awesome. Yeah, plan fluctuations. Wouldn't that be funny if that were a thing? And guys, this is lunchtime in crude oil. This is why I don't trade crude oil in the afternoons. I can't sit and watch this stuff. It's like watching paint dry. All right, so while this is going, as much as I want it to